A very good morning to you all. It's Christmas Eve, and we've got Luke Moore joining us live from Aberdeen. How are you,
Good
Luke?
morning. Good morning. Yes, it's fresh up here, all the way up in Aberdeen. We drove 13 hours on Saturday because I've got a little dog, so we couldn't fly, we couldn't get the train. We had to drive 13 hours. But luckily, the wind and the rain came on Sunday, so we were able to get up.
Can you
Nice,
fit
easy
all
drive.
the Christmas gifts in the back of a Lamborghini? I wasn't sure that would get up the
See,
road.
this is the trick. See, sent the parcels here. So we didn't actually travel with anything. So we just had to do a monumental wrapping day yesterday. We're all set. It's Christmas Eve. We're excited. We are ready to go. So how are you, my friend? What's going on?
Well, I'm hoping that my mother and sister aren't watching this morning because I'm going to do my Christmas shopping at St Pancras in about 2 hours. I always found whenever I was flying home from Heathrow or Gatwick, I always found that Terminal 5 at Heathrow was a wonderful place to do Christmas shopping. And that was usually on the 23rd. But I think leaving it this late on the 24th, I could be in a bit spot of bother.
Oh, well, I got the Eurostar to Paris through St Pancras not too long ago, just a couple of weeks ago. And I was pretty impressed at what they've got there now. You know, if you want any goods, they've got this huge, wicked thing in the middle of the concourse. So, yeah, if you want to get some...
Well, what I really need to get every year, my sister's so easy to buy for because she's a Harrods Christmas bear every year. But I haven't got it yet. So I'm hoping that Harrods and St Pancras Station is open and hoping that they've got some bears left. Anyway, talking about being bearish, eh? We don't slow down here, do we, Luke Moore? We don't slow down.
Nothing on you. There's no flies on you.
We've, thanks to our 10-minute lay-in this morning, and geez, it was needed. I did a 7-hour lunch with Fred yesterday. Producer Fred and I, we drank France.
I could hear him in my ear, and I think he sounds a little bit croaky. Sounds a little bit hoarse. So where did you go? Come on, spill the beans. Where did you go?
Into Leadenhall Market. And it's called Planet of the Grapes, which is very clever. Yeah.
Good friend of IG's, Matt Harris, runs Planet of the Grapes.
No way.
We've known Matt for many, many years. So if you've ever been along to an IG wine tasting, virtually or in person, with one of the premium account managers, it's normally run by Matt. Brilliant place. So I'm sure you were really well looked after.
Yeah, it really was. It was fantastic. And the producer Fred, was our waiter French? Because I find it very funny the two of you speaking English and arguing about, you know, kind of who knew more about wine. The guy was clearly a sommelier and qualified, but still Fred was, you know, nailing it because we had a beautiful first bottle where he was actually from, where Fred grew up, and it was superb. One of the best reds I've ever had.
Nice. Well, in Paris, there was a video that I watched on YouTube. I'm a bit of a foodie, so when it comes to things like food and wine, I'm trying to, you know, learn how I go. I'm actually sat in my father-in-law's office, and he's the biggest wine kind of connoisseur that I know. So I'm trying to pick up lots of different things. And anyway, I was watching this food travel video of Paris, and we ended up in a food market because, well, it was recommended to us, and it was a sommelier, and it was this. It was funny enough. It was a rapper called Action Bronson, and he travels when he's on tour. He was a chef before he became a rapper, so he was traveling all around, and you know, he ended up in this little market in Paris with this guy, and they sat there, and it was called the Butcher of Paris. So if you ever know, down in La Marais, in Les Marché des Enfants Rouges, there's this fantastic butcher. You pick your meat, you go on the other side of the counter, and they cook it for you, and it's incredible.
I love that.
But the wine guy, the chap called Clovis, was there when we were there, and I kind of fanboyed a little bit. I said, "Oh, you know, we're only here because I watched your YouTube video." And he's, "Oh yeah, cool, thanks, mate, nice."
Haven't heard that one before.
Yeah, exactly.
So, but he taught you how to rap, and that's what you were doing all day yesterday.
Clearly.
Good stuff. Right, let's go into some overnight action because we've got a Christmas Eve profit warning. It's just so low class, isn't it? Right, guys, yeah, we got another 20% profit warning to do. When should we put it out? How about Christmas Eve?
Yeah, surefire way to get yourself on the naughty list. No presents for anyone at Vistry Group. What a shocker! I mean, they must have seen this coming. So they've cut their adjusted profit before tax expectations from 300 to 250, and that is ahead of their full trading update in the second week of January. It's not good. It's not a good look. It never is a good look.
And warning also about cash inflow. So closing net debt going to be in the region of 200 million. There's a few arguments here that it's about delayed projects and they've been more selective over proposed transactions. But Greg Fitzgerald, what a year he's had. Today's announcement and the financial outcome for full year 24 is disappointing. That sums it up there, really.
Now, okay, so here's a question then for you. So would this have been sold off on a normal day? Well, sorry, yeah, it would have been sold off on a normal day. Do you think it gets killed today because there's no other stories in the market? So actually, could this strategy backfire?
Funny, the exact same thought went through my mind. I was thinking, right, thin markets, are we going to see an overextended move, or will they get away with it and it'll be largely swept under the carpet?
Well, we were looking to try and see, what else has been announced. There's been a kind of change in one of AstraZeneca's minor drug portfolio deliverables. So very kind of small change. There is nothing else out. So if anybody is working today and they're looking at the UK stock market, there is, there's some macro overnight. We've seen kind of a fairly kind of decent run from Asia handing over from the US. So there might be some kind of macro drift higher in equities. But that's the only story out there.
The Santa rally started in the FTSE. That's the really fun thing. But we'll come on to that in a moment, because here is the last 3 months of Vistry, and it's just brutal. So, first of all, we had that warning out of nowhere, really, at 1,300 or £13, I should say. And if you see the rise of this stock, it had. As Axel was talking about yesterday, we saw it come straight back down to this level from June 2023. That's where it is trading at the moment. But where's our next sort of level of support beneath that? We're talking more like £5.80. So does it just go straight to £5.80 today?
I mean, you can see it happening. There's no early calls. Clearly, our friends at various different market makers are not awake yet, or they've taken a day off. So when we get some early indications, we'll let you know. But it times really poorly, because the FT put out a note this morning alongside this, talking about the home builder sector in general. I mean, it was kind of nicely placed next to an article about Keir Starmer saying how he hasn't really done too much in the first 100 days. But there's a lot of pressure from the Labour government to build houses. Yet here we are, not even 3 or 4 months into the Labour government, yet there's real problems over there. These extended higher interest rates are really hurting the consumer, really hurting people that are trying to get new mortgages, and it's also hurting those that need to borrow in order to finance them.
Yeah. So Andrew McKelvey, good morning to you. Good morning, Funky Gibbon. Good morning, Monkey Man. Funky Gibbon and Monkey Man, fantastic. Andrew just passing on his message to you. Both HWG and ELM have had some minor good news this morning as well. So we can take a look at those in a second. But the FTSE, yes, here it is. The Santa rally begins up 60 basis points. And that rally started in the afternoon yesterday. As you say, I kind of drift up with the help of our American friends. But if we take a look at those future markets this morning, FTSE most definitely the outperformer up. The Eurostoxx has now joined it as well, with a new finance minister in France leading the CAC to an 80 basis point rally there to look before the market opens in 10 minutes. Eric Lombard is your new French finance minister, looking to bring the deficit down to only 5% there. So that's helping the CAC up 80 basis points this morning.
Yeah, yeah. I mean, there isn't a huge amount. There isn't. There isn't a huge amount going on. I mean, it's Christmas, okay? So I think we're not expecting huge moves, but we're gonna have to see how these auctions open up and just see what happens across the FTSE. What did we put down yesterday's rally to? Was there, because there definitely felt to be a mid-afternoon jump. There was some consumer sentiment data or some consumer confidence data that came out that missed expectations over in the States, but yet we rallied into the afternoon.
Yeah, here's the but we're really just back to where the highs were of Friday.
But we're also about halfway back on. If you're going to just zoom out another couple of ticks,
yeah,
we've retraced about half of those losses that we saw on Thursday.
That's right. Yeah, just it's the usual lazy time of year. The market's clearly not going to attack to the downside, so it's that lazy drift up, as you say. But yeah, interesting. Just for those of you that have got a position in the yen, then your governor of the Bank of Japan is actually talking tomorrow, and he is giving quite an important speech relative to monetary policy across there. Of course, they were dovish at the last meeting, maybe surprisingly dovish, and we have seen the yen fall away. We'll get more, and the problem was that they were dovish for January as well. It wasn't just a December dovish note, like the kind of opposite of Powell. It was the direct opposite there, more dovish than the market expected as well. That might be a little bit dialed down in his speech tomorrow. So if you've got yen positions, don't ruin your Christmas dinner. We've got, let's go back there and have a look at the 1 hour chart. There it is. There's the meeting. Well, that's the Fed. That was the Bank of Japan. And you can see we've gone from 155 to 157. So yeah, just beware that when you're having your turkey tomorrow, then your yen will be moving one way or the other.
Is that normal? Is that normal that they talk on Christmas Day? I mean, I know that
it's obviously they don't celebrate Christmas, so it's just a normal day. It's the same. I've actually had a phone call from my traders in Turkey at 3 p.m. saying, Rich, have you seen the Turkish lira move? Because we had an open exposure in some Turkish banks. And I said, girls, I trust you. Just please, deal with it. I'm literally about to start my Christmas dinner. The Queen's coming on TV in 2 minutes. Please, But it would, to be honest, it was about a 5% move in the Turkish lira. So, it's just a normal day. And in China as well, we had some headlines out of China this morning.
You're saying there was a bid on Turkey on Christmas Day?
That's about as bad as some of my jokes. What's your plans for tomorrow then? Come on.
So we are camped in up here. So it's normally presents in the morning, all of the presents in the morning, and then Em's grandparents are going to get here kind of mid-morning, lunch at around 2, games in the afternoon.
Yeah, what would be your game of choice?
Be the highlight. Well, I know Gavin and Stacey's got to be the highlight for most Christmas households this year.
Oh, there's a new one, is there?
BBC One. There's a new special coming out.
Brilliant.
And we grew up on it. It was that show that just was getting better and better with age as I was growing up, kind of through my teens. So, yeah, really excited for that. The game of choice, I think it's Scrabble, which I'm never good at.
Better with numbers.
I can't seem to see. Yeah, I just can never seem to see the words. Rummy Cub is a personal favourite, so we can get the numbers and you can get the patterns, which is a little bit more my speed. How about what do you play in the McDonald house?
Well, I'm interested to hear what our viewers play. What is Andrew McKelvey? What's your? I would take you to be a Pictionary kind of man. What do we think Monkey Man plays, Luke?
Donkey Kong has to be. Pulls out the old Nintendo, plugs it in, and just like throws barrels at people.
Oh, I'm gutted. My nephews aren't coming down to spend Christmas with us this year, so we're missing out on all the computer games and the PlayStation 4. And I am in a spot of bother because Shirley, if you're watching right now, turn the volume down. I haven't got my nephew his PlayStation game that he wanted. But can I still get it? Can you download things nowadays? Or am I completely screwed? Am I the worst uncle ever in history? Please, somebody let me know how you get a PlayStation 4 game. Crew Motorfest 4 limited edition. He wants the limited edition one, whatever that is.
Well, we had some family around last night, and I was being educated in the ways of Roblox. So Roblox and Minecraft, that's something that's just completely skipped me by. Yeah. So I was being educated in it last night. It's the game to get.
So Monkey Man more into Halo. Wow. Didn't you tell us you were retired, Monkey Man? Did you retire at 25 years old or something? Have we got a secret whale on the chat?
Halo was another one of those games. Halo 2, Halo 3, they were my games of choice going up through school. So yeah, Monkey Man, we'll have to play a game.
And yeah, Andrew McKelvey, more like a murder mystery. I mean, those games are just fantastic. We had a birthday party once, and it was a murder mystery game, and everybody got a part. And you had to play your part. So I was some American geeky college kid and dressed up, with the gel back hair and the sports jacket and everything. What a laugh we had for the whole evening, trying to work out and of course, everybody gets murdered so during the day until you manage to guess who it is. Good.
Yeah, nice. It's the old, is it the old Wink Murder as well? You can play around the table.
What's that one, sorry?
So you get one person on the table is the murderer, and you've all got to kind of keep an eye on each other's eyes. And if you get winked at by the murderer, you've got to die. And then it's up to try and figure out who it is that's the murderer.
Fantastic.
Good. All the good ones.
All the good ones. Good. Right. Carl Wolf will say, what's a game? On what platform do you want to play it? I'll see what you can find. Probably an emulator out there for most hardware. This is for my nephew. The game Crew Motorfest 4 limited edition. I've got an option to go for Ultimate Edition as well, which is about £100 for a computer game. What on earth?
Crew Motorfest.
Oh, Fred's just found it for 42.
26 pounds on Amazon. How quickly do you reckon Amazon Prime can get it?
That's not the limited edition, I don't think.
Oh, okay.
Yeah. Oh, this is tricky. An emulator. Well, right, we need to find that. Right, we're going to go to the sting. We've got 2 minutes before we hit the opening bell, so let's go to the opening bell. Rather concerned yesterday that the bell had lost its string look. Did you take that up to Scotland with you?
Have we found it yet? I saw Ronnie was trying to was kind of furiously just trying to ring in midair. So no, we haven't. I'm not sure what I got anything here that I can use.
I think Mini Cooper's playing the joke on us. I think after all my pranks on Mini Cooper, I think he's run off with the string.
I seem to have a teddy bear with a Miami Dolphins helmet on it. Can I give that a whack? Would that work?
Can we possibly see the painting in your background? Can you take the camera around to one side a little bit more? Because you just told me what that painting is, and that is incredible. Oh, yeah, not quite. That's it there. So run us through what that is, Luke Moore.
Let me see if I can switch off my blur a little bit. There you go.
Wow.
So this, oh, blimey, full screen. This is a poster, if anyone can recognise that. Obviously, being Aberdeen is big golf country up here. So that is the last hole at St Andrews in the Old Course. And this is a signed poster from Tiger Woods to my father-in-law. So it is, a big piece of memorabilia up here. Very big. Pride of place. So there's lots of different things. So you've got him with Colin Montgomery up here. There's Dan Marino here, which is why we've got the Miami Dolphins. So we're in a bit of a sporting memorabilia kind of hub.
God, that's fantastic. Right, looks like we've got about, we've got about 15 seconds here. I'll get up the correct screen for our opening prices for. Right, are we ready, Luke Moore? Are we ready? You're going to Miami Dolphin it with it, and I'll give the opening bell for Christmas Eve half day. That actually works much better than I ever believed it would. So are stocks going to forgive Vistry, or is it going to get an absolute hiding for putting out a profit warning on Christmas Eve when it thinks that nobody's watching? Let's wait and find out. I doubt it will be opening up straight away. I think that one may be a delayed.
Yeah, the auction I can see is indicating it's uncrossed at 586.
Oh, right.
Which would put it down 10%.
That wasn't a bad, didn't make you a bad price there, did I, Luke? 588?
Didn't make us a bad price. 588, 587, there you go. That is, yeah, look, that's going to be the biggest mover on the day. I'd bet my bottom dollar on it. There's not going to be too much else out there, unless we've missed a story. But no, I can't imagine that one's going to open anytime soon. I'll keep half an eye on it for us, though.
Great. Right. You keep an eye on that, and we'll go through some of these moves. So St. James's Place up 1%. British Land up 1%. Where is the mighty Canal Plus opening? We had Liberum say that it was... What was the comment? Sorry, Luke?
It was one of the most oversold stocks in the UK. So it's kind of been scuttling along the bottom. They're up. They are back above £2, 197 to 204.
There we
So
go.
good.
Oh, my goodness. Havas has gone another. Since we highlighted it on Friday, Havas has now gone over 16% higher. Once we went through that breakup story of Vivendi and highlighted at 9:45 a.m. So please let us know if you picked up some Havas. I clearly went for the wrong one. I went for lots of Canal Plus, and this has gone from 142 to 168. Wow. So Havas was the one so far.
I mean, look, it's been a decent move. I think that theory that it was forced sellers from French long stocks holders only seems to be playing out. So it seems to be playing out. Havas is the insurance side of it, though, right? The insurance
advertising.
The advertising.
Sorry, in Amsterdam. Right. So let's get the losers on the FTSE. So Flutter down 90 basis points. Smith and Nephew. So very Christmas Eve-like move, but not so much in Europe. Europe does have a bit of a bid, with the autos up 1%. Air France, this is of course the CAC moving higher on that appointment of the new French Finance Minister. And like that one, Fred? And so Renault and Air France are up 70 to 1.3%. All the luxury is up about 0.5% as well. Do we have any negative moves in Europe? Not to be seen yet. Germany's closed, of course. I made this mistake in 2008. We had a portfolio while I was still at the hedge fund, and I had stock to sell before Christmas, and he wanted out. So I did very careful mathematics, of selling a fifth of the position each day on like the 18th, 19th, 22nd, 23rd, and I had my final bit of stock to go on the 24th in Germany. Germany doesn't open on the 24th. Yeah. I just hit my head against the screen.
Got to warehouse that risk over Christmas.
So amateur.
Not what you want to do.
Yeah.
Very, very amateur.
Yeah.
Yeah, it's not what you want to be doing. You don't want to be stuck holding the baby. I mean, probably worth noting, it's a half day in the UK today and a half day in the US today. So we are closing. I think the US market's closed at 6 o'clock this evening. So if you're going to be looking at the open, it is a half day. So don't be like Rich and get stuck into a position. Make sure if you've got something to do, you get in and you get out. Because the last thing you want to be doing is stuck.
Is the UK 12 or 12:30?
The UK is
12:30. 12:30, right? Yeah, which will then go into auction until 12:35. Excuse me. I used to get really annoyed because the French stocks are open. I think it's about an hour later, isn't it? It's a 1 or 1:30. So everybody basically. Christmas Eve's incredible. I always wanted to work Christmas Eve at the banks because they bring their pets in, they bring their dogs in. You're chucking footballs around the the trading floor, and it's just fun, right? It's like bring your kid to work day, that sort of thing.
Yeah, yeah.
So that's what people are doing right now across the investment banks. Hedge fund managers are already, skiing on the slopes or something. But it's, there's very few people that are sitting watching the market like we are.
Well, we are, and Vistry is still not open.
Well,
it's still not open. 13% is now indicated. Oh, it's just opened. We opened at 569, which put it down 11%.
So it's a 20% profit warning, and the stock's down 12.
14 now. 13, 14.
Oh God, this is going to get people stopped out, I would imagine. Do you think? Few people getting stopped
gaps
out
like that. Where does that put it down to? Yeah. Where is that relative to the other lows that we were looking at? Because that's come in, and it's going to have broken lows, and now it's getting sold off. So now this is the point that you're seeing those margin calls and those stops. You've seen that initial move lower, and now people are getting forced sold out. So this will probably happen for a couple of minutes. I always find this phenomenon quite interesting, Rich, is that you see these stocks opening lower, and then there's a period of 5-10 minutes where it will change, it will chop and change.
Yeah.
Whilst everybody that needs to be liquidated or stopped or whatever happens, and then you see the buyers come in. It's almost the worst time to get cut.
Well, it just depends, doesn't it? It's because I think it depends how much of a surprise and how well held the position is. For example, if Apple warned, right, that sales, there just wasn't as many, wasn't demand, then I would imagine it's so well held, and it takes people a good 48 hours to process the information. I think you'd continue, but this just isn't. It's not that much of a surprise, is it? If you're in Vistry now, what are you in the stock for? You would think, for the longer term. On a third profit warning in 3 months. Yeah.
It's gone from being a trade to being an investment.
525. There you go.
Yeah, now it's down. Now it's shaved off 20%.
I mean, that's another 5% just from where it uncrossed in the auction. When these things happen, there is. So yeah, that's now. It was a 20% warning on profits, and now the stock's down 20%. That makes more sense.
That makes more sense. Is there a case now that this is obviously being put to market before their trading update on the 15th of January, if they still update on the 15th of January, but on the RNS this morning they said they would do. Mm-hmm. Is there a case from the management to say, why did you put this out on Christmas Eve? Why was it not dealt with in a more liquid day? Because if it was dealt with on a more liquid day, the story may have not stuck out as much. So if you've been, it just seems strange to me that you're trying to sneak this out when no one's looking. Well, there you go. You've just been taught a lesson by the stock market that you can't sneak these news out and not expect to trade at fair value.
I think it was Monkey Man said earlier, in the US it's called taking the trash out. So get your news story out, on a bank holiday or, but this is just, nobody forgets this. If you're a hedge fund manager and you've got Vistry, somebody has just chosen to ruin your Christmas. And
these guys are going to be, it's not been a good year to be a shareholder in a home builder anyway. So you'd expect that the management need to keep their kind of big shareholders happy. Not like this. That's not the way you do it. It really isn't the way you do it. I suppose, to Monkey Man's point, you take the trash out on the expectation that something's going to turn the corner, because if they now have another bad reading in January, you're going to get another write down on the share price. So you've got to get their trash out and then hope that there's a turnaround story that you can pitch. In fairness to them, the execs were saying that a lot of the reason as to why the money hasn't come in this year was because of a delay of certain deliverables, delay of projects that they now expect to deliver next year. So providing that all now happens, it's not a we've lost money. It's a regrading of your expectations.
I'm just looking back, because then there's the other side of things as well, that you get a surprise that comes out around this time of year. And the biggest one I've ever seen is Walmart buying Asda. And I think, oh, sorry, you don't have to put the chart up there, mate. I'm still trying to find it. Terence is all over it today. We've got Terence in the gallery working the Christmas shift, poor guy. And he's as fast as ever. He's all over it. There's no mince pies in the gallery today. So it must have been 2. When did I do work?
Makes it sound like there are mince pies in the gallery more, on normal days. I know I've got to know when I'm in the office where to come and find the snacks, because there's been a kind of a complete whip around of clean desk policy and hot desking, and we trying to find the snacks is, we used to know where they all were, because you used to know the risk guys always had some snacks. There was always some snacks in marketing. Now there's nothing. So if there's snacks in the TV studio, I'm going to be coming back there next week.
Yeah, so it was. I'm trying to remember if it was Christmas Day or if it was New Year's Day. But the analysts were so annoyed because they had to come back from their holidays. Yeah, it was 1999, but I think it was maybe. Here we go. New York Times article. Oh, I'm not going to be able to get through the paywall on that, am I? Yeah, there we go. Right. So. No, that's not. Yeah. Anyway, long story short, sometimes there's big mergers announced on the 1st of January and things like that as well. So good.
We'll see if anything happens, but we're going to keep an eye on this Vistry. It's now bouncing a little bit. Now 536 down 18. So it's had a bit of a buy the dip, a bit of a guacamole, so they say.
Right, let's have a quick check on the others then. Let's see how the FTSE is continuing. Oh, what's that up? 4.7%. Train line. Well, that's exactly where, because Fred's just bought a ticket. Mine's all ready to go. I'm going to be on the 11 a.m. train today up to Scotland. And yeah, so there we go. Always, buy what you use the most, and there's what we've all been using today. So not like driving our Lamborghinis up to Aberdeen like Luke Moore.
Yeah, a French Lamborghini called Renault. It was lovely though. Just rented, rebadged Lambo. We picked a car up on Friday evening after work. Drove straight up the A1. Stopped off to see young Tom Roberts for a quick coffee on the way up. Made a little nice bacon and sausage sandwich, which was good.
In his countryside mansion?
In his countryside mansion, yeah, just north of Peterborough. Lovely place. I mean, you can never get a train to work on time, but it's a lovely place these days.
I mean, did the hounds come and meet you at the gate?
Yeah, with the butlers and everything kind of rolled out for me. Yeah, I'll go there. Good bacon, good farm shop bacon.
Excellent. Oh, I made up with a Greg's woman. So we're like that now. I went in to get my bacon roll this morning. So yeah, me and I have to find out her name actually, but I gave her a good Christmas wish this morning. Good Christmas wishes, I should say, not a Christmas wish.
Did the Christmas wishes get you any any kind of dish?
As much ketchup as I wanted. Right, Andrew McKelvey's saying Vistry are telling the market that they're not really in control. Not a good look. And then Carl Wolf coming back with some more ideas on where I get my game. Thank you for that, sir. Right, Travis Perkins up 2%. That's interesting. Travis Perkins positive response there to Vistry. And we got Carnival up 1.3. Weatherspoons up 1. Vodafone, at last, there is a rally in the alley. And Vodafone Perkin, it said, above 67 pence, which I'm very happy to see. I'm definitely fully loaded on those at the moment, let's say. EasyJet up 80 basis points. Do we have any look on the mining stocks? HSBC up 80.
I saw Ferexpo was Ferexpo still up? Was that around there?
Yeah, Ferexpo up 1.5.
Yeah, Ferexpo's up there, 1.5.
What about my Rios? Rios is going to be the only one unchanged on the day, isn't it? Wait till you see. There it is. Yeah, up 0.16%. Brilliant. And my Anglo's down on the day. Great.
I did see for the kind of Elon Musk's the Musketeers, we saw a story that IAG have done a tie-up with SpaceX to put Wi-Fi on their planes. So that looks like it's going to be a story that kind of comes in next year. Yeah, keep an eye on that one. But they're up 0.5%, 0.7%. So not huge.
That was in the FT, wasn't it? I thought I saw that this morning.
It was in I sent it to you on Teams. It was like a Business Insider note. So they've just done a deal
Yahoo
with
Finance
the parent company
as well.
Yeah, Yahoo Finance.
Right, there's Musk. Where have we got Amazon and there? Yeah, you can have a look at today's Yahoo Finance. It's got a great picture of Santa Claus at the New York Stock Exchange there. Yeah, we Monkey Man saying, don't get too excited about Vodafone. We always know that it will drop back. Certainly, yeah, that's the voice of experience there. Right. Okay, good. So
the opening bell FOMO.
Look, Moore, shall we have a quick 3-minute break before we come back and we look at your best trades of the year and your worst trades of the year, and also everything else in confirm and send. So quick 3-minute break. We'll let you go and get a cup of tea and see if you can get your bacon roll there. Look.
See if I can go and be very quick. I've run out of water, so let's see how quickly I can go and get it.
Don't show your mulled wine that you showed me earlier. Good stuff. Right, we'll see you in 3.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
And we're back in. So now, who watched the quiz yesterday? The first part of the quiz with myself, Luke Moore, as one of the team captains, against Chris Beecham. Didn't Chris Beecham's personality, competitiveness come out, Luke?
Do you know, I was watching it back, and I was watching it with my wife yesterday because I was like, "You got to watch this quiz." You know, I bigged it up, and you got to watch it. And the first couple of rounds, I mean, we came out the gate strong. I think my team, we came out the gate strong. Yeah, Beachy, I don't think he kind of quite shared the same enthusiasm as we did. But you're trying to compete. My team, you had Pete Ward, who is, you know, fantastically knowledgeable, and you've got Chris Beecham, who is, you know, could well be the most knowledgeable. He's a historian,
Yeah.
you know, by kind of trade. That's his big thing. So anything about politics, anything about UK stocks, he is the man. And then of course Ronnie was kind of doing his international piece. I was there with you know, with Axel, very much a technical analyst, very much a price action kind of guy, and then Ange, and we all know and love Ange. So I felt like the first couple of rounds, you know, they got a couple of punches in. They got a couple. It wasn't some of our, you know, wasn't the strongest couple of rounds, but let's see if I can pull it back in the second.
That's it, because at this moment in time, it's 19-19. We're
19
drawn halfway through. It's half time, and then you're going to get the rest of it at 9:10 today. And yeah, very excited. Very excited.
I think the one I was kicking myself with the most was the biggest companies in the FTSE 100.
Yeah.
That was so obvious. And the other one was the 3 merger. That one. Having listened back to it now, and the way that you worded the question, you're such a git.
So I asked my girlfriend that 3 times, and she was disgusted. Her company actually took part in the 3 merger, so they were one of the advisors on it, and so she should have got it straight away. And yeah. No, she was disgusted. They'll never get that. Nobody will understand. That's a shit question.
And it was just the way you said it. It was not 1 merger, not 2 mergers, but 3 merger. And it was the way that you said 3 merger, and then it was no kind of plural. I should have picked up on it.
Beecham got it. I think the second time of me asking the question, Beecham got it. But I'm not sure. Yeah, I'm not sure what it was that clicked exactly. But anyway, more excitement
great fun.
To be had
really
there
good.
today.
Really, really good.
And
awesome.
Poor Tom Wolstenholme. So Dan Gummer has done an incredible edit, and he's got a great sense of humour, Dan, as well. And he's literally got up on screen the voice of Tom work from home. Boom, boom. So yeah,
the voice of Tom work from home.
Tom and I, you know, have a great camaraderie, but also very competitive. You know, since he's been quizzing me and everything. So yeah, managed to had a good laugh at that one.
Yeah.
So yeah, so that's the quiz.
That was brilliant. Definitely catch it. Actually, we want to see your scores as well. If you can mail in your scores, if you're all, you know, tied up 19, or put it in the chat. I want to see how you're getting on. I want to know whether we were any good or not, because, you know, we were just competing amongst ourselves. So if you kept track of your score, let us know.
I think people would have definitely got points on you in the FTSE, biggest companies in the FTSE by market cap. I think, yeah, you were both rubbish at that. Right.
We're both rubbish by that.
Oh my goodness, MSTR talking about paying dividends in Bitcoin.
I tell you what, did you know there was a company that tried to do that before called Overstock?
That rings, yeah, that rings
that company?
Yeah.
OSTK, so they were, you're taking the mind back now, the first kind of run to 20, which was 2017, 2016.
Mm-hmm.
Overstock was this is a kind of, at that point, this was so classic, so classically crypto of its day, was they were a furniture shop. And, you know, they were kind of like one of these, you know, online furniture retailers. You can buy a sofa, you can buy chairs, you can buy tables, bits and pieces. And they decided that they were going to pay a digital dividend. So like, instead of giving you cash, they were going to issue a token and you could hold the OSTK tokens. And so this attracted loads of buyers. Loads of people came in to buy the stock because they wanted to get involved with the hype.
Yeah.
But the problem was, at that point, there was absolutely zero infrastructure for anyone to receive a crypto dividend. So we ended up having to go to closing trades only, because there was no way that we would have feasibly been able to process those dividends. We were okay on the leverage side, so the spread bet and the CFD, but on the cash equity side, we had no idea how it was going to happen.
Well,
so our
that's
prime
what,
brokers restricted us.
and I'm not sure we're that much further forward now on, not we as a company, but the world. Dividends in Bitcoin, obviously, what percentage of shareholders have actually got a wallet to start with? Anyway, right. So that's but Monkey Man throwing out that
fraught with issues.
That clanger there in the news this morning. Right, IAG now top of the leaderboard. It looks like, or is that no? That's because I'm not scrolled up. So down 17%. Vistry has settled. Nvidia up 2.7. Ocado up 1.7. Carnival up 1.6. Marks and Spencer's up 1.1.
Nvidia, I was going to say, that's definitely Nvidia, not Nvidia.
Right, let's go on to the questions. Come on, what's question one?
Get your coffee.
Is there a stock you wish you had invested in or traded this year, Luke Moore?
Do you know there's I've made such a conscious effort to try and condition myself to not get FOMO. We've spoken about it a lot on our Talking Shop podcast on here, and so I don't like to think about the ones that I've missed, but I've just got this crypto rally all wrong. I just haven't touched it. It was 60,000. I thought, no, it's too high. It'll pull back. Then it was 70, and then it stuck around 70, 80 for a little while. And then this run up to 100, I've just completely missed. So I'd have liked to have been into MicroStrategy or a Coinbase, something like that. And I had a client that I was talking to around this time last year, who had a huge position in Coinbase, and we were talking about hedging strategies. So we came into the office, and he was talking about how much would it cost to borrow, how much would the financing be, best way to trade it on a forward or on a cash DFB, all these different types of things. And then we thought, right, okay, Coinbase is probably not going to be the one because the borrow is pretty difficult to get hold of. Let's see if you could get a correlated trade on the NASDAQ. And in the end, he didn't take the trade. And I mean, what a trade to not hedge Coinbase for about 12 months. So that thing's been on an absolute rip. So Coinbase, MicroStrategy, I think are the ones that got away from me this year. I just didn't have the conviction at the time. Yeah. And now I'm sat there chasing it. So the worst thing I could do now is pile in at the highs. I need to see some form of dip to kind of come back in. But the whole crypto thing's just completely missed me this year.
I listened to a podcast. Do you know Downtown Josh Brown? So
Downtown Josh Brown, I do, yeah.
Yeah, so Josh Brown that's been pretty much in the industry. I think he started a year before I did, and he's been on CNBC for a good 10 years now. And I love the way he communicates. He doesn't try and be more clever than he is. He's essentially a trader who's turned into a portfolio manager, and he's so down to earth, right? So relatable. I listened to his podcast, really enjoy his podcast. And he had a fund manager on who also is one of these sort of advisors on CNBC. So she comes on and she talks about her profits. And I must admit, sometimes I don't agree with what she says, sometimes her positions, but she hasn't been in NVIDIA. And she was very honest on the podcast, not so much on CNBC. Podcasts a lot more, I think you get somebody's sort of true feeling because they're talking for 45 minutes. And she said, look, we've missed NVIDIA completely, but here's the other stocks I'm invested in, Broadcom. And she was a big bull on Broadcom, and she's been right. Incidentally, she says it was crazy to be up 40% after its numbers. But back in March, I was doing a run around Hyde Park and listening to this thing, and she introduced me to Quanta Services. And I think I've mentioned this a few times in the show, but it ticks every single box that I wanted. And I'm annoyed. I got into it, but I got into it like a normal size position. A sort of, as I would take with other less high conviction trades. But this ticked so many boxes in my mind that I wish I'd really had a proper go at this one. And it was when it was trading 240, and now it's trading 330. And I think I was only once offside on it, and that was on August the 5th. And I actually added to the position there. And that's the great feeling. On a day like August the 5th, you learn what your true conviction for positions are. And I saw this one down to 220. Yeah, it was 220. I thought it got down. No, it must have been 230. And added more. And it's just never looked back since. But I'm annoyed at myself.
These guys are, I think we were talking about it on the pod the other day. They're at the kind of intersection of power and, is it data processing? Is that what you're saying?
Well, they'll be building the infrastructure going into data centers. And yeah, here we go. If you want to throw that up there, Terence, thank you. So yeah, the pylons, the underground systems, renewable wind farms, the actual power stations, they're just, everything that you want to be involved in power generation, then, they're there. But I don't have a position now. I got out of it at 320, and I think it was at 327 now. So do I go back in January? I don't know. It's definitely, I'm keen to buy it on a dip. I should probably sell puts. That would be the best. Sell puts to buy some kind of upside structure, maybe as well.
Well, this is also what I'm thinking about with the crypto names. Is there a way where you buy puts? Sorry, you sell puts?
Well, yeah, I don't think we discuss that now, do we?
No. Do you end up, trying to get assigned on shares at lower price levels to then, in theory, buy the dip? But you've got some huge volatile swings to kind of keep an eye on. So tricky. I think that quanta services seems to be at the intersection of everything that we think is going to play out next year. We know that there's going to be a huge demand for power. There's going to be a huge demand for infrastructure upgrades, data processing that comes with the AI move. All of that building out of the infrastructure is one of those key themes for next year. So look, we'll keep an eye on it.
What about the UK, Luke Moore? What would you go for in the UK?
I'm a big Scottish mortgage bull. I love kind of a sterling way to get exposure to some tech growth. They've had a good year, in fairness. So they're up, I want to say 20 to 25% this year. So for those that don't know, SMT, they are an investment trust based out of your dear Edinburgh. But the name is misleading. The name is completely misleading. They are
They should rebrand, shouldn't they?
They really should. Yeah, they really should. But they are now a tech fund. So their biggest holdings are the Nvidias, the ASMLs. But do you know what I like about them? They've got a mandate where they can spin some of the fund into private companies. So this isn't kind of scary Woodford style, startup pharma companies. This is SpaceX. This is ByteDance, the guys that own TikTok. So they've got huge, mature private businesses. TransferWise was one of their plays this year that IPO'd and has traded fairly okay. So post IPO as an exit. So I like them. They tick my boxes and they can slide into my ISA quite nicely as a long-term hold. And they're just going to own the assets that I buy, that I use, that I like to, think are going to be the companies of tomorrow.
And there we have it. There's the Scottish Mortgage Investment Trust, 12 of 30 holdings. So there you go. Space Exploration Technologies, 5%. Meta, Tesla, Ferrari. I mean, it's some great names there, isn't it? Let's see if I can get this. Shopify.
There's some great names. And one that you wouldn't put with a name like Scottish Mortgage. You just wouldn't. If you don't know, then you wouldn't know. But I tell you, the reason why it kind of came on my list, they do a fantastic podcast where the fund managers interview founders and CEOs of their holding companies. So they're doing a load of stuff in kind of new food and the way that we're going to kind of feed people for the next decades. They're doing things with distribution. They're doing things. One of their stocks there, Mercado Libre. Meli is the ticker.
Yeah.
They're the Amazon of South America.
Wow.
So you can imagine the Amazon Prime kind of infrastructure that we have across the Western world, try doing that in Peru or try doing that in Argentina where you don't have that level of infrastructure. So there's a big bet going on with those guys there, and I think it's one of their top 3 holdings. So yeah, in the UK,
their
I
top
like
holding, yeah,
S&T.
up 6% of the portfolio, with Amazon a close second, and space exploration and Nvidia. I mean, it's almost like if you know, I think everybody who's come into investing in the past 4 years has heard of Cathie Wood, right? And whatever you think of Cathie, and there is, you know, it's almost like a Marmite situation. The intention behind her ideas is right, and I think if you're looking for a way to get into, you know, Cathie Wood's kind of ARC structure, then, you know, are these guys just a safer way to go for the same sort of themes, these futuristic, you know, themes that Cathie Wood talks about? You know, you got a little bit more.
Yeah, I mean, that's the play. The one thing to kind of just keep an eye on, the risk factor with these guys is, how do you value a SpaceX, right? So it's a private business, and we've seen that they've been issuing stock, they've been raising money, and they're continuing to kind of have a paper valuation that rises and rises. But if you're a publicly traded fund, which they are, how do you value if 25% of their funds net asset value is private and there's no benchmark? So they claim that they've got an incredibly rigorous valuation process, but it's also, the market is the real litmus test.
Well,
so they actually trade at a discount to their net asset value as a result. So their discount it's around 15% at the moment. So if you're investing £1, you're getting 15 pence worth of assets for free, because the net asset value the stock is trading at a discount to the NAV.
And here's the weekly chart. So going back to COVID, let's say, it was pretty flat across 18, 19. And then it took off as everything did, going from £5 to £15, and then dropped from £15 to £6.40, and that's where I had them. I had them from £7 down to £6.40.
It's amazing how you can get, you know, your perspective on the story changes completely depending on when you got in and when you got out.
Yes.
My average is somewhere in the kind of mid 7s at the moment, so I'm okay in my long term.
Yeah, that looks great. Good stuff. Well, look, we're coming to a close because we have Aaron Bright to join us to take us home into Christmas. And yeah, we're going to let you go away and get those presents wrapped.
Well, I've messed my shifts up a little bit today. So there was a family dinner last night that I could not avoid, and I was on last night's late shift. So I had to kind of duck and dive a little bit to try and get myself out of last night's late shift. And yeah, I managed to lift. Has Lefty been on yet? Left Eris? He hasn't been on yet.
Not yet, no.
That's one for the new year. Anyway, so in order to dig me out of a hole with the family last night, I had to take on the Christmas Eve late. So I'll be on the phones tonight from 5 till 10. Not that there'll be anything open. It'll be very, very quiet.
Yeah.
But well,
that's probably the best shift ever, isn't it?
Well, yeah. Normally I'd hide myself away in this office. I might go and put myself downstairs in the dining room so I can at least kind of hang out with everybody.
Right,
but,
everybody. Whatever admin problems you have with your IG account, you know that phone line's open till 10 p.m. tonight.
Yeah.
And Luke will be all lonely. I'm gonna phone up at least 8:30. And
what are you doing?
Yeah. Good stuff. Right, look, thank you very much. We're going to take a quick break. We'll swap you over with Aaron Bright. But have a wonderful Christmas, my friend. And yeah, very much looking forward to us working together back in January.
And have a safe trip up the road today. See you in well, good luck getting up to Scotland.
That's right. Yeah, I've already had one message saying that there is problems on the track. So come on, the bus replacement services.
Hell yeah.
Good stuff. Look, have a great one. We'll see you soon.
Thank you very much. Merry Christmas, everybody. Take care.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Welcome back. So we've got Aaron Bright joining us now for the run-in to Christmas. We're taking a bit of a half day today, aren't we, Aaron?
Yeah, I guess so. Yeah, it's always nice just before Christmas, things quieten down a bit, get to spend some time with the family.
And the first time we get to see your wonderful bookshelf there as well.
Oh, I'm glad you like it. We've just yeah, done a lot of work clearing it up, getting rid of some bits and bobs and reorganizing it. So yeah, it's a nicer view now rather than the IG background.
I like that a lot. So yeah, where do we start? Would you like to chat about Vistry? Would you like to chat about plans for tomorrow, or shall we go into US macro world?
Oh, I think we can do a bit of everything. I mean, tomorrow's a big day. It starts tonight, actually. We've got a load of people coming over.
Nice.
And a big one tomorrow of I think there's around 30 people where we're going tomorw. And there's a very, sorry, you were saying.
Do you take your own dishes for something like that?
No, we don't actually. And then it's a whole day thing with quizzes, very competitive quizzes and dessert competitions. It's quite a fun one. We do it every year at these friends.
That's what we did actually. We so in New Zealand, obviously slightly different Christmas, lots sunnier by the lake, and we had 25 people that were sort of stuck in New Zealand. The kind of all the travellers from all over the world basically that had family back home they wouldn't be with. So we all got together, but it was bring your own dish and bring a bottle of wine, but the bottle of wine had to be wrapped. So you would have a wine tasting competition and we would grade every single bottle or every single drink and then work out. But then it was discounted by a factor of the inverse of the price. I.e.,
I see.
If you spent more, it had to be bloody better than if it was just a cheap one. So yeah,
very nice.
What was it, 19 crimes or something? 16 crimes?
Oh yeah, I know that one.
Yeah,
19 crimes. Yeah.
That was the one that won overall because it was fairly cheap. So yeah, good. Well, macro world.
Yeah. Been an interesting year. I think. To an extent, I think people were somewhat surprised how well equity markets have done a little bit, and how we've been talking about it's the year of the bonds for at least 2 years now. But obviously we've spoken probably for the past 6 months about how the long end particularly throws a bit of a tantrum. I mean, obviously in the credit space, spreads have tightened and that area's rallied, but the sovereigns, it hasn't really done too well relative to what equities have performed.
Well, so there's our yield chart. So 10-year looks like it's going to be going out the year around about the 459 level, and the 2-year down at 434. So we've got a 25-cent gap now, or 0.25 gap in the right direction, and that's after we uninverted for a while.
Yes, yeah.
Now we're pointing the right way.
Yeah, it's interesting because the uninversion is often the sign that a potential recession is coming after the inversion. But obviously, we've seen really strong data. We've seen a strong US economy. I've spoken to people in the US and they just see things going fairly swimmingly for the time being, even though things are expensive there.
And is the long end going up for the right reasons?
Well, I think there's been a bit of a disconnect between the equity market and the bond market. I would say yes, that the long end is definitely in a bit of a I guess, dilemma about where it sees the US going, where it sees the economy going. And it's going up because it's concerned about the data that's coming out in the sense that, well, inflation's still elevated, particularly the service level of inflation, both in the UK and parts of the US. So there's just concerns about that. And, I guess the rate path, are we going to get rates which have been priced in previously, which are, were coming down perhaps too quickly and getting too exuberant. I guess that was what some of the concerns were.
And once President Musk is in power, then do you think they're going to do away with the Fed?
No, I don't think so. I think that they'll still have their role, but you know what Trump's like. He'll probably write a whole tweet if he doesn't like something Powell's done.
Well, the tweet is out this morning, and from the person who's actually in control, Elon Musk. And where was it now? I wrote this down, but it was something along the lines of the Fed is hugely overstaffed. That was his tweet this morning. So he's planning to come in and chop up as part of the Dodge, the Department of Government Efficiency. He's clearly got the Fed as one place where he can save a lot of money.
Yeah, absolutely. I can see that. He's very, very keen to cut spending, and he's, I think, in the camp which has always viewed government as a way to sort of protect people rather than be sort of big bureaucracies. And I think obviously him, Trump, RFK, everyone in that sort of camp is on the same wavelength there. So, you know, there's going to be a lot of interest about when Trump gets sworn in, about how policy changes and about how policy sort of comes to fruition when you know those are in power next year.
Any big market forecasts for 25, Aaron?
Well, it's a tough one to predict. I do think that we're going to probably see, you know, bouts of volatility next year. I would expect that. I think that geopolitics is still likely to play a role in markets next year. I don't think we're out of the woods yet, whether it be Trump, you know, wanting to end things, but there's always potential for escalation, both in the Middle East and potentially Russia, Ukraine. So I think that's going to be an area to keep an eye on. But it's going to determine on inflation, firstly, how that is kept under control. It's going to be determined by the rate cuts and, you know, whether they come to fruition, whether we see elevated inflation and rate cuts don't come down, and also how significant Trump's economic policy is, whether he's going to pursue his big tariff agenda and what that has for, you know, the implications of that for both China and Europe.
And Mexico and Canada and, you know,
yeah,
and Panama.
All 194 countries. Yeah, absolutely. Yeah. No, it's definitely, there's a little bit of uncertainty at the moment. So I think things will come a little bit clearer when Trump is sworn in and starts bringing executive orders and legislation into power and into the world. And
closer to home, there seems to be for some reason, Musk has got involved in the Reform Party.
Yes. Yeah.
Right, which he's got absolutely no place in British politics, but he is sticking his oar in. But could we see, you know, Reform come some kind of voice, and maybe we see a move away from two-party politics in the UK?
Yes, absolutely. I think that's a very, very real possibility. I mean, I love politics. I was, you know, following the last election very closely and looking at the results. And as the results came in, particularly in the northeast, and areas of what was the red wall, which went blue in 2019 because of Brexit, and then now has reverted somewhat back red again under Starmer. The margins of Labour winning those seats were fairly small, and Reform was coming in second quite closely in a lot of those seats. And we've obviously seen Keir Starmer become immensely unpopular for a number of reasons, and definitely the shine has come off of him somewhat. And I think you know, some people perhaps regret voting for him, which is sort of what people are saying, particularly, you know, farmers. We've seen protesting over inheritance tax laws there, and if they see Reform saying all the right messages, given that the margins were small in some of those seats and they came second in a load of seats, they got around, I think it was 20% of the vote, or a very, very high number. You know, then we could definitely see Reform take more seats. Absolutely. Obviously, the political system's in favour for two parties, but, you know, there were other parties before, Labour and Conservatives, so we might be in for a wind of change.
So a move to the right in the UK, a move to the right in France, potentially Germany. You know, what's the potential repercussions of all those in a world where geopolitics has already sort of been bubbling for the last 2 years?
Well, it depends on what the agendas of the countries are. I mean, we've seen it in Argentina as well, where I just was, and they've obviously taken quite a big step to the right with Javier Milei. And I think, you know, on the theory, the sort of thoughts on the ground there have been quite positive about how he's managed to bring down inflation from sort of, what is it, 100% year on year to sort of a more respectable figure. So
2.5.
yeah. So it's getting back to normality there. Obviously, look, if they're on the same page about what they want to achieve in terms of free trade, in terms of sort of liberal markets, and in terms of sort of neoliberal economic policies, then we could see potentially more prosperity. You know, it's difficult to forecast, but yeah, look, with geopolitics bubbling away, there's always concerns, sort of in the wider world, I guess you could say.
Right. On a cheerier note, where's your S&P 2025 year-end target, Aaron?
Oh, that's impossible. That's like,
oh, come on,
the most
everybody
impossible
throws one out
question.
there.
I think we could be in for, if we get a good year, positive earnings growth. I'd expect probably another 10% for the S&P, 10-12%. So I'd rather do it in percentage terms. And look, I think
so 6,800.
Yeah, I think that's it could be, you know, sensible. But look, it's dependent on if we see sort of, you know, some sort of crazy idiosyncratic event happens like COVID, or we see a huge deterioration in the US economy. I'm gonna look like a bit of a fool for that price target. But
yeah, no, you are wrong. It finishes at 4,789.
Yeah, that's probably what's going to happen now that I've jinxed it.
Well, but it's funny because you of course are in the 99% that are calling for the market to finish between 6,600 and 7,200.
Yeah.
Now we know what happens in a market if everybody expects the same thing. It's the last thing that's going to happen, right?
Yeah. And this is the worry, and I think this is also to an extent has been the concern for the past couple of years. People were expecting US equities to sell off, particularly in 2023, and they were up, what, 20% in 2023, something like that. It was very impressive, yeah.
What's the surprising market? Is it Taiwan? Is it Japan? Is it the FTSE? Is it Sweden? What do you think? Or is it Argentina? You know, what's the sort of lesser expected potential performer of the year, you think?
Well, I think because I'm sort of a bit hawkish on sort of the geopolitical side of things, I think we could see defensive stocks do quite well potentially, and I think we could see oil and gold continue to perform if we see geopolitical concerns, just almost as safe havens if there is concerns around geopolitics. So I think they could, you know, that obviously we have positions in those sort of areas across the portfolios for diversification reasons. But, you know, if my concerns come to fruition where we see more hostilities, then they could definitely be beneficiaries of that.
I think you've just described the perfect macro scenario for the FTSE 100.
Sounds like it, doesn't it?
Oil, resources, you know, pharma defensive, telco defensive, utilities defensive.
Yeah,
that sounds like a FTSE up 20% to me.
Well, I don't think you can ever be that optimistic about the FTSE. But yeah, I mean, we obviously have positions in the FTSE across our portfolios because of those characteristics that you've mentioned. They offer a different portfolio of stocks to, you know, US tech and just the US in general. Obviously, the returns have been quite lackluster, but we're adding UK equity exposure as a form of sort of diversification, really, and a differentiation across the portfolios, across different geographies and across different sectors.
And it's funny, if the FTSE did move 20% higher, it would go from being incredibly discounted to mildly discounted against global markets.
Yeah.
It would move
that's
from
the irony of it.
a PE of 13 times to 15.5 times. Well, depending on what the growth is. If they got some growth in there as well, then, you know, more like 14.5.
And we're over something like 2022 for the US, something like that. So
23.5.
Yeah, so huge dispersion in terms of valuations there. So something that's always you know, important to be cognizant of.
Good. Right, we've got it on record. FTSE prediction up 20% next year. So you heard it here first on Christmas Eve. If anybody's still out there, let us know in the chat, because what we're about to move to, Aaron Bright, which you are very much part of, is our staff greetings Christmas video of the year. It's only 10 minutes. It's you'll see a few good laughs in there, and then it's the second part of that quiz. Aaron Bright, you were gutted not to be involved in that quiz, weren't you?
I know. I was sunning myself in Rio during it, so yeah, I can't say I was too gutted.
Next year.
Next year.
And are you going to stick around and watch it this morning?
Oh, of course, absolutely.
Good stuff. Right. So yeah, everybody have a wonderful Christmas. We got about 20 seconds until we go into that staff video. So yeah, I'm going to run to get the train. I'm going to be watching it on the train up to Scotland. But yeah, everybody from IG wishing you a very, very Merry Christmas. And producer Fred shouting into your ear as well. Are we going to get producer Fred in the background? Is that yeah? Unlikely. So we got more chance of Santa going down the chimney than Fred in the studio. Aaron, thanks so much for joining us. Your final words.
Much. Merry Christmas to everyone, and hopefully we get a strong year for equities and portfolios next year.
Excellent. Enjoy the video. Enjoy your Christmas, and we'll see you on the 30th of December at 7:40 a.m. Have a great time.
Hello everyone, welcome to the IG special Christmas show with myself and Rich McDonald.
So we have some very special guests for you today. That is the wonderful staff of IG. We've got them, dragged them into the studio kicking and screaming to send their Christmas messages out to their loved ones and to you at home.
There'll be some funny ones, some outtakes, but also a lot of heartfelt thanks to our trader friends who've been following us on this journey all the way with Trade Live with IG.
I would like to say a very Merry Christmas to my mum and dad and my sister Natalie and her husband Tim in Nelspruit. Hope you guys are having a lovely time. Dad, thinking especially of you at this time. And I'd also like to send a message to my other sister in Orlando and Melissa and her husband Benj and my precious nephew Luke. Wish we could be with you guys maybe next year. Let's see what we can do. But wishing you all a very Merry Christmas. Love you guys lots.
Merry Christmas to friends, family and colleagues. Call out to my own family, my daughters Pollyanna and Lillian, my baby boy Jude, my wife Michaela, and the two cats Axel and Saber as well. So that's our family. Merry Christmas to everyone.
Hi all family. Sorry I'm not actually going to see you on Christmas Day. Nieces Lila and Iris, happy Christmas. Looking forward to seeing you soon. I might bring you a present.
I would love to say Merry Christmas to my family, my friends, and everyone who supports me with everything I do, my business ventures, my partner, all of you guys. Merry Christmas.
And I just want to say a big hi and a Merry Christmas. Wish everybody a Happy New Year, to all my family, Tasman and Tamara, my daughters, my partner Jay, mum, family, dogs, everybody. Have a brilliant Christmas and can't wait for the new year.
You see that? What, a lie? Yeah, and then you just say, Merry Christmas because you're on telly.
Oh, is it right? Oh, what? What do you want me to say?
Merry Christmas.
What, just stand
To anybody you like, any football team,
I
any
don't
friends,
think
family, if you want.
Merry Christmas to Fred.
Merry Christmas and a Happy New Year to everyone out there. I just want to give you a few shout outs to a few people. So I wanted to one of my friends, Sammy Khan, who has recently been talking to me about investments, about ISAs and about how it's a beneficial tax wrapper. So a big shout out to him. Shout out to my manager, Peter Ward, for being so supportive. And to everyone else here at IG.
Hi everyone, I am Dion Weeks. I am a HR business partner here at IG. And who do I want to wish? Definitely my mum and dad, who will probably never see this because I need to influence them to buy some products. Yeah. Equally, my two daughters, who will see this and say, can you buy me some products? My lovely dog and my grandson. So yeah, happy Christmas. Looking forward to eating loads, being merry, having fun.
Merry Christmas, everyone. I want to say an extra special Merry Christmas to my children, Eve and Zach, and I hope everyone has a wonderful Christmas and Happy New Year. Bye.
Merry Christmas to my parents, to my wife, my children, and to all at IG. I hope you have a very prosperous new year.
We'd like, obviously, for IG, they obviously want a good share of the market and make sure they are profitable and continue going as a business and a company that people want to invest in. Obviously, for my, I'm going to wish Happy Hanukkah, yeah, and obviously those who have other very happy holidays of your own.
To our IG investment clients, thank you for trusting us throughout 2024 on your wealth journey. In a year where your investment choices have continued to expand, we really appreciate your commitment to partnering with us. As we head into the festive season, we wish you and your loved ones all the best. And for 2025, we wish you a prosperous new year. Thank you very much.
Yes, I'd like to wish a very happy Christmas to everyone here at IG, my fellow colleagues, of course, and wish my best to my family back home in Austria. Yeah, lovely.
Merry Christmas all the way back to Australia to my parents, my sister and my Labrador Charlie.
Well, this Christmas I'll be up with my in-laws up in Scotland, so to my mum, dad, my brother at Kent, have a good time, have a great Christmas without me, and I shall see you next year.
To my two wonderful little girls, Amelie, who's aged 11, and Clara, who's aged 6, who are now out on the global internet, which they may or may not like. I wish them a very, very wonderful Christmas. I hope they receive everything they've asked for. And I hope everybody has a wonderful Christmas and a very peaceful and prosperous new year.
The Christmas wish from me is health, prosperity, and good fortune over Christmas and well into 2025.
Merry Christmas and a happy Hanukkah to all those who celebrate. I hope you have a great 2025 and look forward to seeing you next year.
Very Merry Christmas to my parents, my grandparents, all my friends back at home in France who I will be seeing very shortly, and very much looking forward to eating for days on end with you guys for the 10 days that I spent here.
Merry Christmas, Bellamy Street!
I just want to say, everyone, Happy Christmas. Have a good one. Hope it goes well. And yeah, just enjoy, be safe, be sensible, but also enjoy the quality downtime as well.
So, firstly, I just wanted to wish Happy Christmas and Happy New Year to my wife, my kids, and my two cats, Marley and Poppy.
So I just want to say Merry Christmas to my mum, my dad, my sister, and my lovely girlfriend, Dr. Ding. Merry Christmas, guys!
Happy Hanukkah. Merry Christmas to all. Hope you have a great festive break. And also Happy New Year.
Merry Christmas, everyone. Big shout out to my dad, his regular watcher, and to my nephews, Sydney, Leo, and Henry. Merry Christmas, and I hope you all have an amazing 2025.
Well, happy Christmas, everybody. Hope you have a brilliant Christmas and a really good New Year.
Also, can't forget my amazing mum and all my lovely sisters and brothers-in-law. Have a great year.
I'd like to wish a very Merry Christmas, firstly to my team at IG, in the brand team. I've only been here for 2 months, but they've been absolutely wonderful, jam-packed months and more interesting stuff to come for next year. I'd also like to wish a very Merry Christmas to my mum and dad, as I'm not going to be spending Christmas with them this year. I'm going to be on the slopes. So sorry, mum and dad, but wishing you all the best all the same.
Want to wish my family and friends, IG clients, IG colleagues, especially Rich, a very Merry Christmas and a Happy New Year.
Merry Christmas. I want to give a shout out to my dad who watches the show. Happy Christmas, Dad. You asked to learn about options, so that's going to be your New Year's resolution for next year. We're going to teach you all about options from the basics to some of the advanced stuff.
Merry Christmas, everyone. Merry Christmas.
Indeed. Very Merry Christmas to everyone at IG, and thank you very much for having me in today.
Merry Christmas. Merry Christmas.
And yeah, take 2, 3, 2, 1.
Merry Christmas.
Take 3, 2, 1.
Merry Christmas.
Take 4.
What do I do? I don't want to do. I told you I wasn't good on camera.
Winding you up.
Oh.
My Christmas wish, more time with family and friends, those who matter most to me.
Well, I have my the majority of my pension invested in the S&P, so I'm wishing for a continued Santa and Trump rally throughout 2025 as well.
My biggest wish is to learn more about trading than what I did in 2024, so be more informed. Selfish wish, I know. And world peace. Yes, world peace.
Can you see this? I hope you can't see this. Can you see my makeup? No? Where's my lip? Yes, yes.
Merry Christmas and Happy New Year, everyone.
Merry Christmas, everyone.
Ready? Is he gonna come in again?
Merry Christmas. Short and sweet.
Merry Christmas, trader friends, and a Happy New Year from all of us here at Trade Live with IG. Here's to a restful season for you, but make sure if you're trading, put your stops and limits in place.
A very Merry Christmas to everybody out there, including my dear mother, Mrs. Doubtfire. Oh, have a lovely Christmas, everybody. I'll be spending Christmas up there in Scotland. So big shout out to my sisters, Karen and Shirley, and their respective husbands, Stuart and John. Harvey, behave this Christmas, or you're not going to get on Santa's list next year. And Fergus and Katie, a big shout out to you guys as well. Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Before Tom Woolston takes up the podium and takes us into round 4, what are the latest scores on the doors?
You are not going to believe this. It is tied neck and neck, 19 points apiece.
Woo! Shakara.
Welcome back to round 4. It looks like you've all been having a lovely time. That stops now. Round 4 is finance, fact or fiction.
Ooh.
I'm going to read out some statements from 2024, and all I need to know is, was this fact or was this fiction?
Are we buzzing in?
That's a good question. Are you buzzing in? Yes, you are buzzing in.
Okay, we're buzzing in. Or are we writing?
No writing.
No, we're buzzing in. Okay.
This is a buzz and speak round.
Okay.
Okay. Question 1. El Salvador issued volcano bonds this year to fund Bitcoin-related...
Oh, you didn't finish the question.
But you buzzed.
I was going to say...
If you buzz, I stop.
I was gonna say to buy loads of Bitcoin.
Yeah, but it's
What I
true
was
or false,
looking
isn't
for, is it true or false?
So there's
So it's true. It's true.
It is true.
Yes.
Are we counting that?
Yeah, you are.
Stuart's in
Come
Clara on that
on.
one.
Yeah,
We'll
you
get back
are.
on that
He was
one.
right, he was
Come on.
Question 2. Jeff Bezos revealed that the next Amazon delivery method will involve drones. As a super early buzz.
True.
You can
I'll finish the question. Jeff Bezos revealed that the next Amazon delivery method will involve drones throwing packages directly through open windows to save time. Obviously false.
-1.
I'm moving it there.
You got trigger happy.
Sorry,
Okay, question 3. Goldman
It's happened
Sachs
again.
introduced
Yeah,
a
but
trading desk that only works during the night, catering to insomniacs and night owls. Buzz over here.
True.
That is false.
No. It was Blue Ocean.
That's -1.
-1.
Question 4. Slovenia introduced a 25% luxury tax on NFT sales in 2024. On my left.
True.
That is true.
No one even trades NFTs anymore.
Yeah.
Rubbish.
Please use the buzzer. Okay.
We need to
aggression.
Riders celebration.
No points for that celebration. Number 5. Argentina's inflation rate hit 230% in 2024.
It's not 230.
On my left.
False.
It's lower.
So true or false?
False.
It is in fact true.
What? 230?
230.
I thought it went up to 210.
You would be
Close
wrong.
enough. Well, that
Number
was
6. A blockchain startup introduced a service where you can immortalize your cat's meows as NFTs for $1,000 each. On my left.
It's going to be true, isn't it?
That is in fact false.
Oh, good. I'm glad for humanity's sake.
For humanity.
Good for humanity, bad for your points. Number 7. Taylor Swift's Eras Tour added $4.3 billion to the US GDP. On my right.
True.
That is true.
Get him.
Well done. According to estimates from Bloomberg Economics.
Whoever Taylor Swift is,
Yeah, who would
Yeah.
believe that?
No,
Oh, God.
Number 8. Gordon Ramsay has started a fund where dividends are paid in gourmet meals instead of...
False.
That is false.
You just hope it's true.
Sorry. I needed to do it. It's my fault.
Number 9. China launched a digital currency backed by tea leaves, claiming it's more stable than the US dollar. Am I right?
False.
That is false. Very good.
Yeah, was he
Same
not
time.
first?
No.
No.
Chris is holding on to make sure that he doesn't go.
Okay.
again.
Your final question. A startup invented a smart fridge that automatically invests in food stocks every time you buy milk. On my left.
False.
That is false. Very
Yes.
good. And at the end of that, we have 1 point to my left and a miss. And we have 1 point to my right, so it's a draw. And that concludes round 4. We'll now take a short break. See you in a minute.
Welcome back to round 5, and this is a takeoff on Would I Lie to You? Now, the idea behind this round is Axel is going to read out a merger, acquisition, IPO, or capital raise that took place in the year 2024. What the other team have to do is decide, is he telling the truth or is he lying? Everybody has come up with a story or researched a merger, acquisition, IPO, or capital raise. And one by one, they're going to read them out and the other team has to guess. 1 point is available for each correct guess. Axel Rudolph.
Nigeria's state oil company NNPC Limited had Africa's largest initial public offering of $1.48 billion by listing 25% of its shares in July 2024 as it raised capital for expansion. The IPO came as the company transitioned from a state-owned enterprise to a more commercially focused entity.
That sounds very plausible.
There was a lot of detail there.
As you'd expect.
But if you're
Teutonic
lying,
approach to
you're always
detail.
giving extra details to make it sound
That's very
incredible.
true.
Ooh, Ronnie, that's a good point.
Yeah.
Sorry?
So just do you want to just
I
repeat
said-
your
I
thoughts
said that
again there?
If you're lying, which I never do, but if you're lying, you always tend to come up with extra unnecessary details just to make it realistic.
Oh,
So you're told anyway.
Okay, so we're going
then. We're going with lie. False.
Yeah.
Look at that face. It doesn't lie. Look at it.
Axel Rudolph.
False.
The accusation is lie.
It is a lie.
Very
good.
1 point to Santa
It
Sprite.
sounded really plausible, actually.
Okay, going across
Can
to
I just say?
beat the
Can I
Pete.
just say? Sorry to interrupt, but this is actually planned for 2026.
Oh.
Beat the Pete.
So earlier on in the year, February, there was a stock in the FTSE AIM market, which is FUM, Futura Medical, and they manufacture contraceptives for males, which have some kind of lubricant inside, which also keeps you standing to attention for longer. This company was acquired by Durex, who are owned by Reckitt, and that was done in March of this year. Market cap 100 million. They made an approach at 160 million.
60% upside.
They came with a strong offer.
Asking for a friend. What's the name of the product?
Right, team.
Believed it, except for the Viagra bits at the end, because you said there's a.
That's part and parcel of their product.
Yes.
So it's within the lubrication of the sheath.
So Axel questioning whether the news could be as good as that.
Yeah.
Too good to be true.
Promising more than it delivers.
You know they're
I think
also
is-
making Viagra as eye drops.
Really?
It doesn't work, but it makes you look hard.
I would say that it was false because around the same time, Bayer pulled all research and development spend on both female and that sort of funky iteration of condoms, especially the female one too, because they did a lot of research and they found out that women wouldn't trust men to always get it.
That was with the contraceptive pill.
Yeah, but there's also a.
This is more of the traditional method.
So what I'm saying
Yes.
is it wasn't that hot.
Like champagne.
It wasn't that hot, yeah.
Yeah.
But my
Stop
gut feel
it.
is it's false because they decided we'll stick with what we know, what
Let's
brings the money.
Go with false. I think the stock still exists, so I think.
Okay, your
False.
final answer, team.
False.
That is a lie.
Oh, I was buying into that. I thought you had.
We'll
it.
get you some.
Bonus points for reading off a blank piece of paper.
It is a
as well.
genuine, it is a genuine company, and that is what they manufacture. But
Does
yeah,
it genuinely make you stand into attention?
Right, on to Luke More points.
Okay, so this year we know that Mars have bid for Kellanova. Kellanova that own Kellogg's, they own Pringles, they own lots of consumer brands. But did you know they've also made a move back in May to acquire the Devon-based company Figgy's Christmas Puddings? £300 million deal. It's being run by the same people that are running the Kellanova deal, so Goldman Sachs and Lazard, and they're trying to get into that kind of premium festive food space. So is that true or is that false?
Team, are you going to swallow that one?
I don't think.
They did a Mars hotel chocolate thing. I didn't know anything about Mrs. Twiggy's Christmas pudding.
Yeah. What has he dished up for you here?
Figgy's
Hey,
Christmas
very
puddings.
good. Well, it doesn't sound like a half-baked story to me.
Two
Yeah.
acquisitions
Sounds
at
like
the
he's
same
trying
time.
to set us on fire here.
Two acquisitions at the same time.
I don't know. He mentions
With
two
Lena
companies.
Khan at the helms.
I
Don't
smell a
buy,
rat.
mate.
Right.
Yes,
Okay,
right.
we're going with final answer.
A lie.
Unfortunately, it is also a lie.
Oh.
You're going to
Figgy's
break
Christmas
this.
Puddings does exist and it is based in Devon. It's a real company.
I think the 300 million was a bit of a giveaway. It's a bit too pricey.
Excellent. Right, going on to Mr. Beecham.
So in May of 2024, Californian company called Astroforge announced it was attempting to raise an aimed $40 million, just $40 million, with its plan to begin platinum mining in asteroids in the solar system in order to respond to the demand for the material.
That is true.
Yeah, it's true.
Oh, that was a very
I think
definitive
that's-
answer from
that is true
Axel
as well.
there.
I like space.
It is indeed true.
Yes, because I've seen it. I knew about it.
I love
Music was-
Can we just take a second for Axel's answer was, yeah, definitely. And Angeline's was, yes, because I like space.
Also, the mining asteroids, they found the best thing.
She's off again.
yeah.
The best thing, and it's called Regulus people. If you want to build stuff in space, and we or humans obviously do, the best thing they found was to make moon dust or asteroid dust with water or human wee, which was stronger.
Human wee.
We.
Human wee.
Because of the acidity.
Yeah, there you go.
You're into that one there.
Excellent. Right, now, Angeline, here is your chance to get this point.
Okay. Are you ready?
Yeah. We have been ready sometime.
Here,
Ready
Angeline.
before.
Angeline, here is your opportunity to get to the point. I mean, get a point.
Wait, you always get a good, story. There's multiple trading points. Way before GameStop. That was your first trade, wasn't it? Was it GameStop?
Oh, no, game.
Game.
Yeah, game was.
Okay.
You're
way
correct.
before Curry's. And way before all that all merged into one thing. There was a company called Opinion, and it merged with Circuit City, trying to get ahead of the game of that retail space, digital, everything else, around the 2000s. And they did succeed. True or false?
Thought she spins a good story.
I thought it was a 2024 story.
I mean, yeah, the clue was in like the review of the year.
Yeah.
But
Well,
that's what we're going with.
Crikey.
It's a confusing trying to.
Opinions and Circuit City.
Why not?
True.
It is true. Still exists. However, it was known as the most bizarre merger, and they never really fully integrated. Didn't know what to do with it. But the company still exists.
Right now,
You forgot to put your glasses on it.
Oh yeah.
Ronnie Eggnog, if this is not a Scandinavian IPO or merger story, I will be disappointed. What do you have for us?
You got it. As we all know, the internet is where you do your shopping nowadays. It's not only Amazon, it's not only Zalando. In Sweden we have Apotea, which is a wordplay on apoteket, which is pharmacy in Swedish. They have just done their IPO now, and it was oversubscribed by 90 times.
Is
True or
that
false?
true or false?
Do you mean the name
Oversubscribed by 90 times.
I agree. 90 times oversubscribed. The biggest IPO in Dubai was something like 30 times oversubscribed for their fledgling Dubai stock market. So I'm going to call.
I agree. False.
BS on that.
Yeah.
I think that's false.
Bulls hit.
Bulls hit.
My
But
mom told me to never lie.
But-
That's true.
Very good.
One point to Santa Sprite.
Wow.
Because
Come
in
on.
Swedish, apotek means pharmacy, doesn't
Well,
it?
that's-
Apotek.
yeah, just-
That's what he said.
He did say that.
Is she like this on the live every day?
Subscribe.
She doesn't listen to a word anybody says.
I think it was like a couple of Swedish billion crowns, so like a couple of £100 million. Not
Wow.
It's a pretty
90
big
times
company.
oversubscribed.
When I used to work as a delivery driver, like half of our packages was from them.
Wow.
There you go.
Excellent.
Nice
Right.
emerging market story there. Thank
Yeah.
you.
Used to be a drug dealer.
Inside
Right, and with that great answer from Ronnie on the Swedish pharmacy delivery company, it's going to be a tough pill to swallow for Rudolph's riders. That's the end of round 5. We're going to take a very quick commercial break. Join us afterwards into round 6.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hello and welcome back. It is round 5. I am Santa Claus and this is my studious little elf, Richard. Are you ready for round 5?
This is fastest fingers first, so this is the speed round.
Oh, this is fingers.
Are we ready to smash through it?
We are indeed.
We are.
Okay, let's go easy on the. Okay, are you ready? Question number 1. NASDAQ 100 welcomed a new tech giant in October 2024. Which company was it?
Was it Super Microcomputer?
Palantir?
Correct.
Oh, very good. Should have known that.
Please, question 2.
Do we?
Oh, you want me to do it?
No. Sorry, I'm just saying. Do we need to?
Oh, it's this
Yeah, I'm on it.
Keep track. Right.
It's like watching Jimmy Carr.
Question 2. In July 2024, the Federal Reserve surprised markets by cutting by a full 50 basis points.
That's too early.
Well,
just say anything.
Is that true or false?
True.
September. It was not July.
Oh.
Come on, cheap market analyst.
Oh no! I just heard the 50.
Get what you pay for.
I just heard the 50 and went for it, sorry.
Question 3. In September 2024, Tesla stock dropped by 9% after an underwhelming product update. What did Elon rename Robotaxi?
He renamed it.
Renamed it.
What did he rename it to?
3 seconds.
Something with X.
Cybercab.
Cybercab.
Question number 4. Nvidia carried out another stock split in 2024. If you owned 100 shares pre-split, how many shares did you own post-split? Rudolph's Riders.
25.
That's embarrassing.
It was the other way round.
250.
No. It was a 10 for 1, so you would own 1,000 shares.
Wow.
Question
That is
number
embarrassing.
6.
That was a consolidation.
Question number 6. Which
Very
well-known
original.
burger chain made headlines in April 2024 for launching its first plant-based burger range made from lab-grown meat?
Wendy's.
No.
Wendy.
Well, can you repeat the question?
McDonald's.
Which well-known burger chain made headlines in April 2024?
Burger King.
Buzzer, please.
Burger King.
Burger King. We
Yeah,
buzzed
but you
first.
gave the wrong answer
We
when you
buzzed
got
first.
your turn to answer.
They already had their go. You buzzed in. Burger King is the correct answer.
Sorry, I thought it was one of
Next time, my boy.
Oh, what?
Right, this is a true or false question.
Right, so we've got to wait for the question. Okay.
Patience. No rest.
It's quite complex.
Oh, good.
JetBlue filed for bankruptcy in November 24, months after their merger with Spirit Airlines fell through.
Dead heat, that.
really
That was a
close.
dead heat. Oh, hang on, no. I've got...
You both say it at the same time. Ready? 3, 2, 1.
True.
False.
Didn't say anything. So it's got to be... It's actually not points to you.
It's
Or you.
false.
What?
Done.
The question was JetBlue filed for bankruptcy
Spirit
after their
filed for
Spirit
bankruptcy.
filed
Spirit
for
filed.
bankruptcy.
Sugar.
Thank you. So points to Luke.
Question number 8. Which company became the largest component of the Nasdaq 100 in December 2024 following a rebalancing?
Nvidia.
Correct.
Oh, obviously.
Too obvious.
It's always
Too
obvious
obvious.
afterwards, Axel. Like technical analysis.
Did we pick that one up
Shots
perfectly?
fired.
Good. Right, the penultimate question. It's very tightly
get ready,
balanced
chaps.
here. Which automotive company announced a new electric truck in November targeting the commercial vehicle market? Pete Ward.
VW?
Tesla.
No. No.
So what's ours?
That is Ford.
Oh, I knew Ford was Ford. Error.
And the final question of the entire quiz, I believe, number 10. In 2024, the EU imposed a regulation requiring all financial documents to include emojis for better accessibility, with Rocket for growth and crying face for losses. True.
That's false.
False.
That is indeed
That is
false.
There's no way.
That's an old blast.
And that concludes our questions.
So we just finished round 6 and we've got the final scores on the doors. But first, we've got that all-important... But first, we've got the all-important costume competition. Who came best dressed today? That's going to be an extra prize.
It's certainly not you.
Which
anyway.
Tom has won.
The judge is Tom Wolstenholme. Who do you think is best dressed today?
Oh my God, this is so unexpected. I wasn't expecting to judge this.
Ronnie's wearing my hat over there.
That's
Ah,
not true.
shut up.
That's not true.
Whoa.
You said you weren't lying.
What we've got is we've got one item per person, so it's fairly even on the effort made. But the one that I think is.
Is there a great unveil?
Can you stop interrupting?
Are there points?
No, there's a prize.
Oh, good.
And the prize is
Wait.
it's quite clear. The most amusing and clearly the winner of the
you
dress
haven't seen
competition
all of it.
is Axel.
You haven't
And you get some premium Waitrose and partners all butter mince pies.
But mince pies are available from other confectioneers. Oh, we missed the light, Tom.
Well, it wasn't done in time, was it?
So after 6 hot rounds of questions, how have you done at home? Let us know. Right into ask@ig.com. Telling your points total, and let's see how you got on against the professionals. What's the final score as Tom Wolstenholme?
It's incredibly tight. There's just 1 point in it. But on 21 points, we have Rudolph's Riders. Very respectable. But the winners, by an incredible 1 point, is Santa Sprouts on 22.
So beat the Pete, Dr. LeChamp, and Ronnie Eggnog. Well done. We also have some great prizes for you. So you'll all be eating this Christmas. Tiny Tim, there we go.
Tiny Tim.
Thanks so much for joining us on today's big BIG.
Christmas quiz of the year.
Right, so we say it together.
Okay.
Thanks for joining us on the BIG.
Big, infamous game of the show.
Big, fat finance Quiz of the year. See you again next year. Join us fresh for a new year on the 6th of January, 7:30 a.m. on Trade Live with IG. Have a fantastic Christmas and a wonderful new year.
Wonderful time of the year. That's because stocks are up again. It's Monday, December 23rd, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. For the final episode where the Three Musketeers are here, I'll be out the rest of the month into the new year. Dylan and Ilya also taking off some time for the holidays. So sporadic schedule here the rest of this week. Overtime will be here on Thursday, Monday next week, Thursday next week as well, and then back to regular programming once we get our way into January. But until then, let's talk markets, guys. Welcome. If you're on the platform, come over to YouTube. Tell us what you're trading. If you're on YouTube, come over to the platform or tastylive.com and see what we're all about. Guys, it was a rocky day, so to speak. Ilya, you and I on Futures Power Hour spent a good deal of time talking about the big risks on the macro level for 2025. So we really didn't focus on today's price action. But I can tell you that from when I looked at the markets last night, when the NASDAQ was up 0.5% to when it was down about 0.5% this morning, to now back where we are today, up by 0.78%, there was some good two-way volatility here as we start this holiday shortened week.
Indeed. We are seeing sort of what we talked about in the wake of the Fed last week, the idea that we hit important levels of support across a lot of markets in that sell-off, and that there was likely to be a pull-up off those levels because there was really no reason to panic and run around with your hair on fire. That, of course, the adjustment has to be respected, but that no critical levels were taken out. And although the trend, for example, in the S&P here, where you see the uptrend from August has rolled over, where you have some serious technical damage done, you nevertheless probably don't have the impetus for a stampede out in the waning days of the year. And so you'd have a pull-up, which is precisely what we're looking at. A pull-up that gives you the correction, but doesn't overturn the breakdown. That line in the sand around 6,100 that marks the break, that's holding. This looks corrective for now, but obviously the range in which this could be corrective is big and wide and could be very, very traumatic for those of us that are bearishly inclined to try to front run. Thankfully, I'm short off the top there. And so I'm just sitting here waiting, letting this move work its way out. And once it finds where ultimately it will grind to a stop, eyeing an opportunity to lay in a little bit.
I mean, Chris, how far does it have to go? How far does it have to go until these non-believers start to quiet their souls and just give up? You know, you would think they would have already stopped thinking anything.
I actually disagree. I think it's completely opposite. I think what would get Ilya on board with being a bull would be like a full year of the S&P moving sideways. That way, earnings catch up. And we can see, and the economy can catch up.
Okay. So is that oil? Is that this SMH chart? You got some good sideways charts.
Well, like if S&P was at 7,000 tomorrow and we woke up, right? I think Ilya would be way more bearish than he was today.
100%.
But
I would be so bearish. I would be indignant.
So I don't think there's a number. It's like a question of how, it's not just the destination, it's the journey, the pace and velocity. And so I think people are looking at this market as we covered. I encourage everyone today to go back and look at the archive for the Futures Power episode for Monday, December 23rd. It's going to be running during that typical 1 p.m. Eastern slot for the next week while I'm out. Ilya and I covered the risk for 2025, and we have a discussion around valuations. We cover a bunch of these various issues, Dylan. But, if we're going to a place where the market is heading into next year with sentiment at all-time highs, effectively, forward earnings estimates at all-time highs, then you probably have a market that, if we continue to push higher, the bearish folks are actually going to get more incentivized to get short because they're going to think it's even further out of whack and there will be an even bigger correction. So I don't think capitulation's here yet. And that's one of the reasons why some of these charts that I look at, like SMH up 3.14% today, and it's still grinding sideways, but getting to the apex of a potential consolidation. If this begins to break out, semis have not been a participant. And they would be a real kick in the pants for this market to get another gear to another new level of all-time highs. So this, to me, can't be ignored. At least for the next week and a half. Because the Santa Claus rally window opens up on Friday. Friday being one of the final 3 days of the trading year, Friday, Monday, Tuesday. And then the first two of the new one, S&P has averaged a gain of 1.3% since 1950 during that window. In some years recently, it hasn't worked. But again, that's why we look at the long-term average. Nonetheless, we're heading out this final week with markets starting to move up. Ilya, I wanted to talk about the trade ideas that you were mentioning, though. Get away from my perma bullishness. And we don't even go into the charts that I was sending you and Victor and one of our former coworkers over the weekend at like 3 o'clock in the morning to talk about why it was prudent to stay bullish. But I want to talk to you about the other ones.
I was actually up and reading them.
You were, and you were responding. And last night I saw a text message from you at like 3:45. I'm like, this son of a bitch doesn't know what time it is. He's like, he should know that I'm not sleeping. It's like, well, I'm actually not asleep, so how could I be mad that he's texting me? That's really. But you mentioned two things.
We're degenerates, folks. We're degenerates.
I'm one of those people who only sleeps like 4 or 5 hours a night. My wife will debate that with me, but I really don't need to get a lot of sleep. You talk about positioning here. These are charts that I shared with you over the weekend that caught my attention. I tweeted them out. If you didn't see me tweet them out, it means you're not following me. Follow me at CVecchioFX. Daily Sentiment Index, a gauge of how people are positioning, how people feel in terms of, well, we'll talk about the dollar index here. Right now, it's sitting up at a level that is in the 3rd percentile. We're talking about TLT, where the daily sentiment index is now in the 10th percentile. In fact, it was even lower than that when the reading came. What we're getting at here is that the market is at an extreme place. Everyone is basically bullish the dollar to a level unforeseen in years. Everyone is bearish TLT, at least the way that the market has moved in recent weeks. TLT has seen a shift that's bearish enough, that unseen since, well, late 2023 when the bottom was in. Ilya, you mentioned your high conviction trades. Dylan, you agree with him about the euro. A long euro trade is effectively a short DXY trade. It's effectively a bet on TLT going up because it means that yields are going down.
That's right.
Ilya, are these charts of the positioning and the sentiment that we're facing in the rates and currencies markets indicative of how you feel that equities may behave until the end of the year? And so I guess wind that back, break it down for us. What are you doing with this information on the screen? How does it impact your trading ideas? Does it reinforce what you said to Tom at the end of last call? And then talk about equities.
No, it absolutely reinforces it. I think we are in what is essentially bizarro September when it comes to the Fed rates dollar story. In September, the markets wanted the Fed to be really dovish. The Fed came out and was indeed very dovish. The response from markets, you're too dovish. You're giving us too much of what we wanted. And so what's going to happen is you're going to reflate the economy. And so we've had a massive rise in the dollar, massive rise in yields, massive sell-off in bonds. Against that backdrop, we, of course, had U.S. economic data getting firmer, which is why the markets reacted the way they did. Now, in December, we've had the polar opposite situation. The markets, after 2.5, 3 months, thinking the U.S. economy is soaring, the Fed is off sides, they need to be more hawkish. The Fed, again, gave them what they wanted, almost to the basis point. And the markets went, oh, now you are way too hawkish, because guess what? U.S. economic data is now going the other way. It started to cool. The PCE numbers last week were a little bit cooler. The consumer confidence numbers we just saw, unexpectedly soft. This is starting to happen the other way. So it looks like bonds are overcooked on the downside. They probably have room to bounce as markets unwind some of their hawkish repositioning. The dollar has room to weaken. That means things like the euro, the pound, look like they're shaping up bottoms and might bounds. What this interestingly means for stocks is on a day like today, you have a perfect example where you have yields rising, stocks rebounding. I actually think we might be in a situation going forward where yields coming in, bonds coming up, and the dollar weakening isn't a good story for stocks because it's a story about global deceleration. We talked earlier when we spoke about the idea that the U.S. economy is the only game in town. Of the three major global economies that power growth for real, you have the U.S., China, and the Eurozone. Of them, China hasn't grown in a year and a half. The Eurozone is back into contraction mode. Their rebound from recession in the first half has failed. The U.S. is the only one growing. If the U.S. slows, as the data might be starting to show from about mid-November or so, as it cools, you have a problem. And valuations
do you have a problem,
are,
or do you have a stronger euro? Do you have a benefit to?
No, you have a better euro. You have a weaker dollar probably across most vectors, but what you have is an equity valuations issue, because if the U.S. slows, there's no plan B. And that is a bad scenario for risk sentiment in a year when a lot of debt rolls over, in a year when all of these other global economies need for the Fed to be easier, not tighter, because they need global credit cost looser, not tighter, because they're not growing like the U.S. is or anything remotely close to it. So we have an issue developing. So I think, yes, bonds higher. Yes, dollar weaker, but that might be a story about equities coming down this time. Just picture today's price action in reverse.
The dollar story is definitely worth watching into next year. We've shared the, I think it was from Steve Dunsey, the Pictet Asset Management in Japan chart with the dollar index analogy for what happened after the 2016 election going into 2017, where the dollar peaks in January 2017 once the drums of trade war begin to beat a little bit louder. And contextualizing that analogy then, given what we've heard out of the Trump administration saying things like there's going to be tariffs on the EU unless they buy more of our gas, or that we're going to annex Greenland, buy it from Denmark, or we're going to take back the Panama Canal, right? There is a very heavy trade war story behind all of this right now, right? The Panama Canal is about trade first and foremost, but this is really about control of the global trade system. And so I look at a dollar index here with that analogy and the sentiment index, and it makes me think that we could be looking for a bit more weakness in the DXY at the start of the year. And also then, if we think about what happens historically speaking, this is a great chart from Jake Bernstein. We see here 10-year Treasury yield after the DSI falls to 10. Well, we just had this happen here at the end of last week on Thursday. Historically speaking, a month later, yields are lower, about by 0.24%. We see a month later, 1.81%, 2.5%, 3 months later, 4.66%, and 5.79%. As you move out in time, directionally, it gets a stronger push for yields to move to the downside. So this could be the exhaustive move in the short term. And I think that's what Tom is getting at, Ilya. If all of a sudden the dollar's getting weaker and yields are coming off the board, that decline in U.S. manufacturing production that we see through the PMIs, we're in contraction territory, maybe that picks up a little bit because U.S. made goods look a little bit cheaper in relative terms. And we're the place that's growing after all, so why not buy from America? Dylan, one thing that happened at the end of last week as well as we look at the end of this year is how breadth improved in the market. This comes from Sentiment Trader. We saw that we had the worst breadth day in 3 months on Thursday, followed by the best one. And when you have that happen, when you go from the worst breadth day in 90 days to the best one in 3 days, what occurs thereafter? That's the 20th time in history that you've seen that flip in breadth occur to such a degree. A week later, the market's higher 70% of the time. A month later, higher 80% of the time. 3 months later, higher 85% of the time. A year later, higher 85% of the time. Kind of feels like last week may have been a seminal turning point where we did our chop and grind and reshuffling of the deck through the middle of December through the Fed meeting. And in the short term, the risk may be cleared. So why not super glide?
And I think it just also speaks to, I think, to your point about Ilya, and just about more broadly than anybody's point of view about a sideways market, insofar as any bought time without meaningful price level changes, time that allows earnings, revenue, cash flow systems, logistics, customer service, all things that actually businesses are, to get better without changing the price. So if you can stay, like to your point, if you can stay sideways for a year, then you get a lot of repair work that happens inside balance sheets and customer service and supply chain.
Yeah, I mean, absolutely. If you can hold up over the course of the next year, it need not be a correction in price. It could be a correction in time, whereby things digest. It need not be an aggressive sell-off. The balance.
Is that where we are with oil? How about an oil short, just on the Trump oil boom?
I was going to do the Don Draper, like, hear me out. What if there's no correction and we just keep rallying?
Yeah.
That's how I'm going into next year, right? I'm riding. I'm not going to be actively trading the next few weeks. I was joking with people, like, should I take this time off? Should I not? My wife's got to work. So, okay, my daughter's going to be home from school. Do we get a sitter? And I work. It's like, what if I have a day where I'm trading and I lose a lot of money? So I just spent a few $100 on someone to watch my kid for the day while I sat at home and lost money. I would be a very grumpy dad. So just going to take the time off, no trading. What am I content with holding into next year when I really start checking my book again on January 6th? Well, on the follow page, got to stay long NASDAQ, got to stay long ES, got to stay long Russell. Not going to swat the hand that's been feeding me all year long, Dylan. So
I'm going to keep my short too. For now.
Okay, well, Dylan, I'm trying to be like.
How about we get consensus on a Tesla short? Is there any?
Tesla we got a Dennis Gartman trade out there before. For those who don't know Dennis Gartman,
we're never going to agree on the stock market.
Oh no!
When I first started working, his letters were very popular on the street, and he would offer really interesting trades, like short Japanese rice in euro terms. And you'd be like, what the hell are you talking about, Dennis Gartman? But I was hearing something from Dylan before. You were kind of pitching a short Tesla in euro terms. Why do you feel like the first?
I was saying long euro currency versus the dollar, short Tesla. I'm not saying short Tesla in euros.
Well, if you're doing both of those trades at the same time, you're effectively.
That's what you end up with, essentially.
That's what you're ending up with, right? Tesla's a dollar-based currency. And
this was really what Dennis Gartman was talking about.
Right.
Where he'd be like, long wheat in gold terms. You're like, okay, so you just want a gold trade.
So you're saying you want me to short Tesla in like Milan or Frankfurt in the Euro ADR?
Maybe. But so why do you feel like the first buddy trade is something that even needs to be discussed right now?
Well, no, it's only because Sosnoff likes to talk about price extremes. And Tesla is the best extreme that exists since the election, and so it just gives us the most opportunity for a clear possible repricing.
Is there anything that's happened in recent days that make you feel that way? Like Donald Trump saying that Elon Musk can never be president?
Not just the biochemistry of two highly unstable billionaire psychopaths in the same car.
Fair point. Ilya, is the Tesla trade coming undone?
I think you have to be really careful here. Obviously, I'm highly skeptical of the first buddy presence as an idea and as a lasting thesis as well. I think anybody should, because when you look at valuing a company, you have to look at and say, okay, well, what is this nebulous thing that Elon Musk's proximity to Trump going to achieve for Tesla specifically? And yes, his presence will achieve something maybe, but what? What exactly could the administration do unilaterally for Tesla only, specifically? Very difficult to imagine.
What about large government contracts?
Yes, there's a report out this weekend that Palantir, Anduril, OpenAI, SpaceX may be putting together a consortium to jointly bid for government contracts moving forward.
But that's not unilaterally at the hands of the president and the president only.
No,
So-
it's at the hands of Congress, which are funded by Peter Thiel, who has significant sway with the Palantir and Anduril folks. So it kind of feels
that's
like.
why I think the Sosnoff's biggest point this year actually just came last week in a Truth or Skepticism, which is the only asset that's at risk is the integrity of the markets, for the very reason where Chris is sort of wandering now, which is that, if there's too obvious a layer of corruption to the point where you're wrong, Ilya, or because the president does just assign huge contracts to Musk consortium companies or not, that risking the integrity of the American contract and financial markets is the number one risk that the Trump presidency represents. Whether that's a massive or small risk is a matter of debate. But
idea. Go ahead.
No, I made my point.
I mean, the idea that the markets can live with these contracts going to these companies is, I think, a reasonable one, because, of course, these companies are the best at what they do. Palantir is the best at what it does. Tesla is the best at what it does. SpaceX is the best at what it does. These are deserving companies. There's no question there. The question is, does the move make sense outside of all of those things? And if the entire logic here is Musk proximity to Trump to some sort of unspecified win outside of the norm, outside of those companies.
Let me ask you this, Ilya. Let me ask you this, good sir. Let's assume that there's the coming First Buddy breakup.
Sure.
Do you think
I think is coming?
Okay. So do you think that reduces either the dollar value or odds of confirmed win for the Musk-Leighton Defense Consortium in the government contracting process? I think it depends. It's irrelevant.
I think it depends. I don't think it's particularly relevant because I think since these companies are the leaders in their fields, I think they will get those looks anyway.
This is where you and I diverge, because these people, this is a vindictive. This is not.
And so this is my next point: is if the breakup is a bad one, I think you're right. I think the president has shown a vindictiveness to his enemies, and if Musk suddenly becomes an enemy, which I think is unlikely, I think he'll just kind of move out of the
Cauchy's saying it's
sphere.
50-50. Cauchy's saying it's 50-50 in a year.
Yeah. So I mean, Doge doesn't have any power anyway. It just has the power to write a report and have some ideas in it.
Only showing that the primary asset is social proximity of Musk.
That's exactly right. That's exactly right. And so I look at the move in Tesla and I say, which part of this outsized move is the proximity versus the contracts that would probably go to these companies anyway because they're leaders in their field?
90%.
Which is the outsized
90% proximity.
Okay. Last week,
as a move in the price, as opposed to the realized reality of contracts.
The majority of the price move since the election.
Exactly. I agree. And so I look at that and I get skeptical.
Okay.
But you don't want to short with us. That's what I don't understand.
I don't want to short because it is a move built around hopium and wishful thinking as opposed to solid foundation.
Based on the certainty of the psychological matrix of psychopaths' inability to sustain intimate.
That kind of move can go on for a long time, though, because it's untethered from anything economical and real. So that can happen for a very long time and can be very painful. Would I short Tesla individually then? No. NASDAQ? Yes, absolutely, just not yet. And a company like Tesla, were it to get cheap enough, I'd be a buyer.
What about the Musk contract on Cauchy, 50-50, that he's even involved in 12 months?
I don't put much stock in that.
I'll tell you what, I go back and forth. Last week I was on The Price of Truth with Victor saying I think that Trump is disrespecting Elon by giving him Doge. And then I see the events that happened in the following days with the government shutdown. And Musk liked the final plan, and Trump was not a fan of it because it didn't include a debt limit extension, which understandably so, right? Why would Democrats give that up? That's the leverage to extract concessions when you're in the minority. Republicans have done it. Democrats have done it back and forth. So why would Democrats just give that leverage away? They wouldn't. So that was never going to be in there if Democrats were going to support the continuing resolution. Nevertheless, I can't help but think from a political strategy perspective, Dylan, if I'm a Republican congressman or senator who's in my 40s, 50s, or 60s, who's going to butter my bread in 4 years' time? Trump or the guy whose net worth is 60 times Trump? Whose good graces my long-term political survival depend upon? Those of an 80, soon-to-be 83, 84-year-old man in a few years? Or the guy who's in his 50s, 60s, who's worth $350 billion and who's now curated all...
440 billion, I think it is.
440 billion. Okay, so Trump's worth what,
it's gone
6?
Up a bit. It's gone up.
So Trump, yeah, so he's worth 80 times Trump, right? So I
would go so far as to say Musk is clearly the most powerful human being on earth. Full stop.
Probably
because he knows how to run political financing at a grassroots level, door knocking, digital door knocking, and regional money in congressional races, primary challenges, all the little game that's played. He clearly knows the game.
Yeah,
and is, I think, the most powerful. He's more powerful than the president.
Well, because the game is, in hindsight, obviously simple. Like, why isn't Trump knocking on doors? Like, well, because you don't need to knock on doors. Everyone has their phone in their hand 24 hours a day.
And if you know how to then fund little congressional races and primary challenges where there's never a primary, it's a huge amount of work. So basically, when Musk says, if they don't do this or this or whatever, I'll fund a primary challenge to them, whoever they are. What he's really saying is, I'm going to make them spend their time calling people, asking for donations of money. Because the more you have a primary challenge, the more the incumbent politician has to spend all of their time on the phone calling and begging for money to deal with the Musk airwave campaign. And so just the threat of an unlimited financed primary on television against an incumbent is very persuasive for any marginal decision to go in Musk's favor, as the debt limit demonstrated. And maybe even more than marginal. It might be total control.
That makes me think that Tesla is not fairly priced at $430.
Meaning it should be more. Because it's the most powerful man in the world, full stop.
If you're working backwards from the basis that the new system of governance that we're heading into is going to be one that's more
access-based,
like more of an oligarchy than times previous, and that Musk, look at the muscle he flexed this week. He flexed more muscle than Trump, legitimately.
And he knows how to. He'll like. All he has to show up in any primary and say full budget, and it just makes the incumbent life a nightmare.
Dylan, you've run a congressional campaign before. I've been on the inside.
And to do it against a well-funded opponent in a primary who's just going to make the candidate spend all of their time raising money and still get smoked.
Like he could drop $1 million into every single district and not even think about his net worth.
Oblivious. 10 million into every district.
Yeah, right. And so that's the sort of Damocles now that looms over. And I think that means Tesla's gonna be a really interesting stock for next year, right? This is not to be a Musk bashing session. I know I have historically.
But I guess the argument is that Trump has more power. He's the president of the United States, and Trump can say, "Don't get so close. Back it down." It's not just money.
And that is very true. And Musk could take his money and, with Vivek, and conjure up a group of people to challenge what's now the
Republican challenging system.
Yeah, and basically say these people are not, they're too enamored with Trump. They're not really trying to make America great again. We need to do these things to make America great again. Like they try to take the mantle from it, and they have the media apparatus on Twitter.
Let's say the most likely thing is this is the beginning of a techno-utopian third party. Andreessen, Sachs, Thiel, Musk. 4 years from now, there's a third-party candidate. That's J.D. Vance running as the Thiel Musk candidate, and you have Republicans and Democrats. Is that still good for the Tesla stock or bad for the Tesla stock?
It's irrelevant for the Tesla stock right now because it's too far afield to really make any kind of trading decisions.
What about Vecchio's point, which is a fascinating one, that Musk proved himself as the world's most powerful man this week with the way he manipulated and controlled the debt ceiling negotiation.
This is one thing. It's one thing.
So the president can't even do this.
Well, it's one thing.
He's technically not the president, but it's
and he's
Dylan,
not
also,
the president.
Well, can we take a step back? How crazy is it that through this entire process, everyone has been treating Trump like he's the president, and Biden is just like a non-factor in this discussion whatsoever?
Well, there's that, and of course,
so
there's
nuts.
also
Because he is.
It's nuts. But also,
crazy.
remember,
Biden and Harris.
They always do this.
Biden created that. Biden created this. This is Biden's creation.
They always do this, though. The debt ceiling always is extended. It is always extended in the 11th hour because they're always jockeying until the last
I know, Ilya, but Musk has.
So what has he done?
He's controlled the whole negotiation. He stopped the deal.
Nominally.
Recut the deal.
He nominally was present. But they always do this.
He took over the whole deal. And of course, they're going to make a deal, but he took over the term sheet and used the threat of
Tesla's undervalued. Dylan, if we're going to tech utopia,
use the threat of primaries to influence the fact that the Democrats, the president of the United States, not the president-elect, not the current president, not the Speaker of the House, not the Senate Majority Leader, but an independent billionaire was the most influential, I think, in the term sheet to get on the last 72 hours before that thing passed, which is a remarkable show of power. I think
there is, of course, a very reasonable argument to say that Elon Musk is J. Pierpont Morgan. That this is the new kind of private sector steering node for all things. As J.P. Morgan Sr., and frankly his son as well, demonstrated over and over and over again in a prior robber.
And Tesla's cheap on the double.
In a prior robber baron age, and that this is another robber baron age, only now it's Silicon Valley robber barons. It's not bankers and oilmen and railroad men. Okay, that's possible, sure. Also, those of us of Soviet extraction walk around with a similar mindset on but one thing, and it's this idiom. The government always has one round in the chamber extra. And
that's a 2025 prediction that Donald Trump will have Elon Musk killed. Go on.
This is the simple reality that you can be as rich as you want and as powerful as you want, but unless you are the government, you're not the government.
But if you control
and Trump is the government.
But if you control the votes, you're the government. And if I have digital door knocking and grassroots campaign,
can't call early elections in the United States. Doesn't matter. If this were Europe, yes.
But I can control votes in the Congress during the tenure of the presidency on fear of primary challenge within 2 years.
Not if the president decides that you need to be relieved of your power and your money, and the president has the means to do that.
But Chris's point is that this dog is out of the barn, the horses have left the yard, whatever you want to say.
Maybe.
And that Elon Musk is going to be rich and
dogs are out of the barn.
And that
the dogs are out of the barn. No, maybe.
But Dylan, I've read enough Philip K. Dick.
Permanent voice.
I've read enough Philip K. Dick. I've watched my Blade Runner and Aliens. I'm into the Ridley Scott lore. This is how those companies start.
Yes. This could be Skynet. This could be Skynet.
No, this is like Waylon West. This is like how you get Waylon Yutani. You have someone who's entrenched interest. And listen, I have been wrong in many regards. Maybe he is still a huckster showman, and I'm right about that. But he has leveraged and flexed his power in a way that makes me think Tesla has more in the tank. And if he gets removed from Doge, forget the Kalshi betting markets. I wonder. He is also someone who is very keen on making sure that he is not treated disrespectfully, he's not embarrassed publicly. And I don't think that Elon would go away quietly if Trump and him met on bad terms.
And if he's J.P. Morgan, if this is the next robber baron age, and he's J.P. Morgan, then it's not necessarily the case that he in his mind, is after unchecked power for its own sake. JP Morgan, for all of his non-competitive string pulling and manipulation of the markets, in his mind was doing the benign thing and working for the good of the nation.
Yes,
he was convinced that this is what he was doing.
Because yes, why else would he open up his personal liquidity to keep the stock market afloat?
That's right.
Right.
That's right.
What a generous thing he did for the New York Stock Exchange.
What a generous, benign thing to do.
What did that afford him?
And to create massive railroad cartels, because we don't need instability, folks. I just need to have people from my bank on every board, and then everything's okay.
SMH here, up 3.14% today. Big day for semiconductors, which continue to grind into nothing for the past several months. October, November, now most of December, we've been bouncing around 240 to 250. It's basically the midpoint of the trading range from the July highs to the August lows. For those that have been range trading this, good on you. I have done that a few times in recent months, but not recently. And that's a damn shame, because just like oil prices, it's been moving sideways. Dylan, oil heading into next year, looks like there's a good deal of supply coming online. Global growth is in question. But geopolitics are basically gone. In terms of seeing what's happening in Eastern Europe and the Middle East, I suppose the most noteworthy thing is that Bashar al-Assad's wife is leaving him. Apparently, she was okay with staying his wife when they were gassing people in Syria. But once he starts a podcast and moves to Moscow, that's just a step too far.
Step down too far.
But like, Syria's done. Maybe this HTS becomes a problem. Iran is going through a gas crisis right now, where they've actually, over the weekend, according to reporting, were forced to decide with powering the nuclear power plants in the country or providing heat to people's homes. And they went to heat to people's homes, so the presidential palace in Tehran was without power for 48 hours. Iran's influence in the region is waning. And obviously Trump is angling for some sort of resolution between Russia and Ukraine, because we've heard Zelensky making the rounds and we've heard all the talks back and forth. Putin's been on the airwaves himself saying how he's looking forward to talking with Trump. What happens to oil in 2025, Dylan? Or is this something we should stay away from?
Lower.
Why?
Because I think the U.S. administration is pro-deregulation and pro-drilling and pro-less regulatory that drives away from crude, and in favor of less regulatory and more permitting that's more in favor of more supply, combined with the end of the war with Russia.
Ilya, you and I were talking about
make a lower oil price.
You and I were talking about this earlier today, Ilya.
Mm-hmm.
Just give the brief recap for people. Where are we looking for oil for going into 2024, or rather 2025?
I mean, I'm with Dylan on the unraveling of geopolitical risk. We can see, and folks should definitely check out the archive of that Futures Power Hour we did earlier today, because there's a chart there showing U.S. output booming. And that's with the number of oil rigs active coming down, with the number of fracking operations coming down. So the U.S. is more efficient at extracting and is able to get to more petroleum production than Russia and Saudi combined, while it reduces capacity, which is incredible. If we were to increase capacity further, because the new administration seems to want to do that, then we get astronomical amounts more oil, and we start to export even more, because a lot of the oil we produce, we can't refine. We refine a different grade of oil. So we're going to start to flood the market with oil. And gas in particular. So that's a thing. Geopolitics, of course, is on the wane, because Iran is losing its entire network. Hamas in shambles, Hezbollah in shambles, Syria off the board. Among other things, how do you resupply a Hezbollah, for example, if you can't move the arms by land across Syria because you don't control Syria anymore? I don't know how. You certainly can't ship it. Iran doesn't control the shipping lanes. The U.S. does. So you have an issue here where Iran probably sits down and doesn't aggravate anything for a while, which is to say, if Israel, the US, and Western powers more generally are engaged really in a contest with Iran, Russia, and their proxies in the Middle East, there's probably not escalation from the Russia-Iran side here. Russia's busy, Iran's defanged. So you probably have less geopolitics as a premium for risk in the price. You take that out, and the supply-demand story is oil abundance. So I'm with the short. I just need the price action to start to recognize it.
Ilya, before we go on here, just want to remind everyone, Tom was talking about those trading hours on last call. The trading hours this week for the futures market, at least, they are a little bit staggered. If you're trading equities and interest rate futures, ES&Q, ZBZN, they close at 1:15 Eastern, 12:15 Central Time tomorrow, and they reopen at 6 p.m. Eastern, 5 Central Time on Christmas night for the Thursday trading session. Thursday, regular open, close there. Crypto, FX, energy, and metal futures, they close a half an hour later tomorrow, 1:45 p.m. Eastern, 12:45 Central Time. And then they reopen same time as everything else Wednesday, Christmas night, 5 p.m. Central, that's 6 Eastern. Grains, livestock, CFE, that's the VIX. You're going to see some staggered times as well, but the VIX futures are closing same time as your equity and interest rate futures. So next 2 days, odd schedule, not atypical for a midweek thing, just like you would see around Thanksgiving or so. Geopolitical risk seems like it's at a low point. I mean, Tom was bringing this up before as well, how, people talk about the wall of worry, Dylan. What's the wall of worry for next year? That's kind of like, that is one of my sticking points.
U.S. government policy unpredictability because of new people. That's the number one new risk for the world.
If this is such a risk, why isn't gold going up more?
I'm not saying it is a risk. I'm saying that that is the only material change in the chessboard where risk can emerge.
Because gold is not a safe haven, and if you thought it was a safe haven, change your mind.
I suppose that's one way of going about it. Why? China's buying gold again. Where's the enthusiasm? Yes. Is this just a dollar and yield story at the moment?
I think it's a dollar and yields and China story together, because if you look at what's been going on here, you see gold in that very tight range starting December. It busts out of that range on the top side because of the China story. It comes back in because of the Fed story. It's basically reset into that range now. So we now have gold basically unchanged for all of its various swings in December, back to where the month started, a narrow band where it's looking for how these forces balance. If the Fed story is indeed that the markets overcooked it on the hawkish side, and indeed, look at the economic data, it's turning. So if that's what's going on here, then, and you get a weaker dollar, you get lower yields, and you get a China buying that the numbers continue to show when we get the December numbers for FX reserves, well, then all of those things fall on the same side of the equation. And I think that's why you see gold actually holding in this range, broadly speaking, going really to the beginning of August, where that support is with that gray line across the screen, as opposed to what's going on with bonds, as opposed to what's going on with the dollar. If gold were only a creature of the dollar and of yields, as it historically is, we would be getting a gold that is collapsing right now. Certainly since August. And we're not. It's holding up. And it's holding up because China is buying, and I don't think anybody really cares about geopolitics that much. I don't think that's really a major contributor to this story. Because if it were, then crude oil wouldn't be on its back, but it is. And so when we look at this whole thing, I think it's the China buying and the Fed story coming into alignment with higher bonds and a weaker dollar that ultimately catalyzes gold higher, and probably by a lot.
We were asked what we thought looked pretty weak going into the next few days. I mean, silver prices are up by 0.84% today, but with gold teetering the way that it is, and it's starting to try to creep below that uptrend from the July, August, November swing lows here, seeing a little bit of damage done to that uptrend. I noticed that silver prices, they're rallying back to, but not getting over the neckline in this potential topping pattern. So if we find ourselves on the other side of the 1 week moving average, $30.57.5 per ounce, that does take you through that uptrend that we lost, get you back above the neckline, and that negates the potential topping, at least momentarily. Of course, it could reverse lower again. But in that case, you then have all right, we've warded off a bearish breakdown, trade back to the other side of consolidation up towards 32.5. You have a reason to press on those longs that I was looking at getting filled and did not last week, thankfully. That would probably mean that gold holds up here. I find this area around 2,600 to be like, that's the line in the sand. The pre-FOMC swing highs that you have in August, the low that you have on September 18th, right where the closing lows are in November, and we find out that China's starting to buy again, and sure enough, we haven't been able to move back below there since that information was revealed to the public. So below 2,600, you got a problem on your hands. But between gold and silver right now, they're kind of in a no man's land. And that's a tough trade to operate around in thin markets over the coming days, which, speaking of coming days, there are some treasury auctions this week. Today's 2-year note auction was pretty strong. In fact, highest foreign demand for 2-year notes that we've seen over the past 6 months. When we look out along the curve, one of the seasonality being something that happens, a pattern within the data. In this case, whenever you have holiday periods with auctions, the auctions are typically some of the weaker ones during a 6-month look back window. Just people aren't around. So if you see weaker treasury auctions this week and next week in particular, I don't read into it too much. The market is already telling you enough. Volatility is starting to go back up as prices are going down. Today you had a good number come across the trade desk and no one really cared at the end of the day. But we're looking at closing lows now for ZN and ZB here. We already brought up the chart that we have for TLT positioning. What's the most efficacious way to play this, Ilya? If you want to be a person who says, you know what, I don't know if this market's going up, but I know when it's going to go up. Rather, no, I don't know when it's going to go up, but I know it's going to go up. So it's not a question of if. I want to get some long delta exposure here. Thinking about that TLT chart that we shared a few minutes ago, how does one position themselves to do so for, say, like a trade for the first quarter?
I think if you're looking at the various flavors of this, because there's expressions of this idea across various assets, I think actually looking at it in FX first becomes attractive, because the price action in something like the euro, for example, looks a lot better to try to play for a bottom, because you've already started to put that in and you have a clear risk reward matrix with at least a 2-to-1 risk reward setup, basically saying that low is going to hold, and I'm really only looking for the swing high on that range. So let's say I'm looking back at getting to, let's say, 108, for example. Or even something lower, even just the very, very top of that immediate range around 106.40, 107. Even that gives you attractive risk reward here, whereas the bonds have not made a similar turn. So if you want to look for something now and lay something on, a micro futures contract, even one that's not options based, low margin, doesn't tie up a lot of capital, doesn't move wildly like something less liquid. The euro, of course, the euro USD exchange rate, which is what this is possibly the most liquid financial instrument in the known universe. So this is not going to move erratically like some other things, most likely. Unless, of course, Martians land in Paris or some such thing.
Why not just be long the bond? Why get messed up with a second?
Because the bond hasn't shown you a sign of a turn yet. I am long the bond, but it's bleeding out. and I'm holding it still because I have a vertical on, and so I'm at max loss, and it's a very modest max loss because I've locked it in that way, only at about 1.5% of account equity. So there's really no reason to mess with this. Would I lay it on fresh now? No, because there's no signs of a turn here yet. Once there are, there are. In the currencies, signs of a turn are occurring, which give you a low against which to benchmark risk. And to say, if it's below this low, I'm wrong. Whereas here, who knows where that is? Yes, sure, you can look at the swing bottoms from mid-year and say, that's the line in the sand. You could do it that way. But in currencies, you've already started to turn. So at the very least, your risk-reward calculus has meaning.
Currencies have started to turn a little bit, which is noteworthy here because so many of them have been dogs recently. The yen, of course, is staying on the floor today. This is something that I may need to manage soon, so maybe I won't be done trading. 11 days to expiry. Kind of bleeding out here. Need 30 more pips. Show me the money. This was the trade that was taken back in September, Dylan, when I was being jocular and saying the BOJ is never going to raise rates again. This thing is going right back to where it was earlier this year. Wish I had a little bit more time on my side because this data bleed is hurting me. But if we get 30 more pips, it was a good call. 0064 puts. We're currently at 0064.29. That was put back on. We're trading closer to 0070. The yen isn't a typical currency that has, it's not like an emerging market currency. So I don't know if we want to view it through that kind of lens. But some of these other currencies, like the British pound, the Canadian dollar, the Australian dollar, they're showing some more issues that I wouldn't call them emerging market currency behaviors, but they're certainly things that happen to currencies, or they're hallmarks of currencies that are facing some sort of crisis or issue, like current account external financing problems. If you see drops in foreign direct investment, looking at the lack of export growth, thinking about a country like Canada, for example, how is the U.S. domestic economy so strong and one of our largest trading partners not benefiting whatsoever, right? That's a problem for the Canadian dollar as we go into 2025.
And the dollar and the pound both show it. You do wonder about are the dollar and the pound actually also likely to go down another 50%? Like, are they just going to become second-class currencies over the next
dollar? I mean, dollar obviously no.
No, I mean
pound,
Canadian dollar.
Oh, I mean Canadian dollar. I think obviously no, because you're attached at the hip to the U.S.
It's been getting weaker. It's been the
Canadian
dollar ain't what it used to be, sir.
Well, no, of course, and it's because the U.S. economic boom has not spilled over even into Canada,
right?
Because everything is going on.
And the British pound, it's the same or worse. The domestic economy is isolated.
Believe it or not, the pound is actually the least worst performing
this is the
major currency
interesting
this year.
thing. So this is the interesting thing. In the UK, you just not only had a situation where inflation was high and growth is weak, which is madness for the central bank. That central bank has had a chance to opine. We had a Bank of England policy announcement last week. They were dovish. They picked growth over inflation, essentially, as the main concern, and the pound still couldn't sell off. That's a sign of tremendous underlying strength, eventually. We'll have to see. The situation with the Canadian dollar largely exists because the U.S. economic boom is centered on services. And Canada exports mainly goods. And in fact, most things the U.S. imports from anywhere is goods, not services. And all of the boom then is primarily benefiting domestic firms. However, we have the largest split, looking at PCE data, of demand, if you want to look at inflation pressure as a proxy for demand, more inflation pressure, more demand. We have the biggest tilt favoring services over goods in 2 decades. This is going to correct eventually. U.S. consumers will want stuff eventually, and not just services. So I don't think Canada is going anywhere fast. as far as becoming a second-class citizen in the G10, but certainly their current issues are multitude, political chaos, essentially a lame duck administration, even without calling an election or losing it. They're effectively out of power already, and an economic situation that's dire. So, no, I don't think Canada is going to fall off the map. I think ultimately the proximity to the U.S. will be a benefit, and North America as a whole, U.S., Mexico, and Canada, will be the powerhouse over the next 5-10 years. Today, the Canadian situation, shorter term, looks awful.
Well, once Canada is the 51st state, or 52nd because we're getting Greenland first, maybe 53rd once we invade Mexico. I don't know. It's so hard to keep up with all the craziness these days.
It gets complicated. It gets complicated.
Yeah, but, it's quite the way to end the year. Dylan, Ilya, it's been an absolute pleasure working with both of you gentlemen this year. I'll see you both in 2025. Happy holidays.
Thank you, Chris. Merry Christmas. Merry Christmas. And then, Ilya, I'll see you on Thursday.
Yes, sir.
For my friends and colleagues, Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Overtime is out of time for today, and I'm out for the rest of this year. So good luck trading. Dylan and Ilya here on Thursday, Monday, and Thursday next week as well. So be sure to tune in. Otherwise, happy holidays and see you soon. Stay tuned, though, because Tasty Live is still on next with Macro Money and Ilya Spivak.
See you there, everybody. What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets, and it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So, this is the performance year to date. This is December the 23rd that we are looking at this 2024. So, not quite the full year, but almost certainly, and comparing it to 2023. So we can see stocks on the whole had another year and a year of similar performance in 2023 versus 2024, looking at the S&P 500. NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though, of course, still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again, and that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise, so rates at the longer end of the curve steeply higher by comparison, 18.8%, almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story in stocks, coupled with the story in rates, coupled with the story in currencies and gold, tells an interesting tale. It tells a story of a robust U.S. economy, which despite Fed rate cuts has driven up yields because economic activity has demanded that rates be higher, especially down at the longer end of the curve. The dollar has continued to benefit from those higher yields as its yield profile against other currencies has looked more attractive. And gold has seemingly found a reason to go up, disconnected from geopolitics, because, of course, if it was a haven and if it was behaving as one, it would show up in crude oil gains. That, of course, the chief geopolitical risk on the board this year. And clearly, if oil doesn't care, why should gold? And indeed, gold is up with stock markets. Not much of a haven then. But gold seems to have found its support in the situation happening in China. They've bought a ton for their reserve account. They have resumed buying in November after a pause from April. And that's been an important reason why gold has managed to hold up, even as the dollar has strengthened, even as yields have gone up. But that increase in yields and that stronger dollar with stronger stocks seems to speak to the very impressive performance of the U.S. economy. As we look here, we can see as of December, the U.S. economy raging higher. The performance here being estimated by PMI numbers. They're more timely than GDP. We can see here that toward the end of the year, the composite index, which takes in both manufacturing and services, it's moving aggressively to the top right side of the chart. As a matter of fact, that is the fastest growth that we have seen in the U.S. since March of 2022. So a very significant acceleration here as ever. These PMI numbers work around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. Manufacturing, we can see, is still in contraction, albeit at a modest speed. The further you go under 50, the faster the contraction. The further you go above 50, the faster the growth. So we can see a very buoyant service sector is pulling the U.S. economy higher, and slight contraction in manufacturing is not holding it back. That ostensibly helps to explain how you get very strong stock markets, you get higher yields and a stronger dollar, even as the Fed cuts rates. But when we look at the situation globally, we find something much more circumspect. Take a look from the beginning of this year for the global PMI numbers that include the US, of course, but also the other economies. And what we find is we haven't done a whole lot. The composite index here, only very little change. There was a pop in the first half of the year. That pop has since fizzled. And so the pace of economic growth is just about where we started the year. It has seemingly stopped improving. And that's because the global service sector has taken quite a few steps back since the middle of the year. And manufacturing, although it was much worse earlier than it is now, it seemingly has returned back to the neutral reading of 50. It nevertheless remains downbeat the world over. So what's going on here? Well, we see here, of course, that the U.S. is mainly powered by its service sector, and we know that most of U.S. imports, that is, from the world at large, are on the good side. Services are mainly furnished by domestic firms, so a lot of this boom is staying inside the U.S. and not spilling over, even to very close proximity, very integrated economies like Canada. And so this is why the global picture looks much more anemic than the US one. Now, global GDP growth is mainly dependent on three core economies. The US is, of course, the biggest one. And then there is the Eurozone and China. We can see here that the remaining 42% to those three economies, 58%, are mainly vendors that depend on demand from the former three. So think Canada and the US, or Mexico and the US. Think Southeast Asia, or the commodity exporting countries in South America, Australia as well, New Zealand as well, and China. Think Central Europe, Nordic Europe as vendors for the Eurozone. And you can see that these three economies are really the linchpins of where growth comes from. And we've already seen that the U.S. is very strong. The situation in the Eurozone is much more sobering, as we can see. The regional economy shrinking for the past 2 months, the composite index sub 50, even as services rebound in December. The situation in manufacturing, as it is globally, anemic, but the rebound that we saw in the first half of the year, and arguably a big reason why this global number started to pop by mid-year, that has fallen away. And now the economy is again flirting with recession-like conditions. The situation in China is one of standstill. These numbers run through November. We haven't seen December's figures yet, but as we can see, these are official figures here. This is China's reopening from zero COVID restrictions. We get a brief pop in service sector and composite demand. The pop in manufacturing much more modest. And since then, after just basically a quarter of an initial upswing, the economy drops and settles into standstill. These numbers are barely removed from the center line at 50. So In one major node outside of the US, we've gone basically nowhere in 6 quarters. Indeed, the economy is in deflation mode, where real GDP is outpacing nominal, suggesting that there is virtually no demand to speak of. And in the other, we've returned to what can become recession-like dynamics. Once again, after this shallow recession-like dip late last year. So the world is operating on what is essentially one leg of the stool. It is the US that is powering global growth, and there is no plan B as we go into 2025. Where this becomes a challenge is in the US, inflation has stopped cooling and is starting to tick up a little bit. The most recent numbers for the Fed's favorite inflation gauge, the PCE index, showing that we're holding at 2.8% on core, and the headline number even moving higher, albeit a little bit less than expected, to 2.4%. Now, this is, as ever, we can see having to do with the service sector being as strong as it is. Core services where that inflation lives. Core goods still slightly negative in their contribution to price, which of course tells you why the US boom isn't spilling over, as we've just mentioned. And housing still largely locked up by what the Fed has done with hiking rates as sharply as it did in 2022. So that bit is waiting for the central bank to cut rates more and perhaps unlock this market. But as we start to get a tick up in core inflation, and indeed at 2.8%, what this means is essentially we have not seen disinflation in the US of any kind since June. June was the last time that we ticked down on core year-on-year PCE. Since then, for the subsequent 5 months, inflation has not fallen. And so what we understandably have seen as a response is the Fed has become more hawkish. The markets have called for it, and the Fed has responded. We can see here that where the policy curve looked like it was going in September has been adjusted substantially to a more hawkish setting, even as the Fed began to cut a little bit in the waning quarter of the year here. Of course, 50 basis points cut in September, a 25 basis point cut in November and December, respectively. Nevertheless, the path forward now much shallower. Rates expected to be a full 100 plus basis points higher, closer to 4 than 3 by the end of the year, because inflation has proven stickier. Now, it's possible that the markets have overcooked this a little bit, because we can see that since mid-November, U.S. economic data has actually been cooling relative to forecasts. So maybe this adjustment has gone a little far. Maybe the markets are a little bit too hawkish, bonds a little bit too weak, rates and the dollar a little bit too high. But none of that changes the inflationary path. So although the markets might be wrong by a little, they're probably not wrong by a lot, and they're probably not wrong about the trend of adjustment here. So we're looking at structurally higher rates next year in the US than we thought even 3 months ago, 4 months ago, and by a significant margin. This, of course, represents a problem not just for the US, but for the world over. So we can see here in the latest numbers from the Bank of International Settlements, and 2022 is the last time they had an update. There'll be another one next year. They do this every 3 years. But these numbers don't change terribly, especially when the disparity is this large. Notice almost all global monetary transactions are settled in the US dollar. Those of you that have heard various chatter about the BRICS maybe coming up with an alternative should look at this sobering total here. This is all of the turnover moving through the BRICS. of which, as we can see very clearly here, most is China. And everything else, India or Russia or indeed some of the others are clearly a pittance comparatively. Here's South Africa right here. So, and of course, there's Brazil. So most of what's here is settled in dollars, and that's because the dollar is so liquid that it is sometimes cheaper, even when there is a bilateral deal to transact from one non-US dollar economy to another. It is cheaper sometimes to trade that currency for dollars and dollars into the third currency versus to do a bilateral deal, because the liquidity of the dollar is so abundant that that's the cheaper way of trading. So not surprisingly, almost all global commerce is settled ultimately in dollars. And what this means is that if the Fed gets a little bit more hawkish and rates don't come down by nearly as much and dollar credit is more expensive, then global credit costs are higher in general. And we can see that as we look at the way that an average of interest rates from the key economies in Europe and the Asia-Pacific region, Germany, UK, Australia, Japan, the top four outside of the US, how their interest rates have moved in lockstep with the US 10-year, even as central banks in the UK and in Germany have cut. The Bank of Japan has hiked. The Bank of the central bank in Australia, the RBA, they've done nothing. But even as that has happened, the rise in U.S. yields has brought a rise in the average of the other four of the alternatives. And that just tells you how ubiquitous the dollar is in global trade. That, of course, sets up a very interesting situation for 2025, where the robust performance in the U.S. means higher rates in the U.S., but also higher rates on weak economies that are not seeing the boom that the U.S. is seeing. Moreover, since the world is dependent on a single point of failure, the U.S. economy's economic strength, it is certainly a point of interest that interest rates are set to be higher there, even just locally, because, of course, that would perhaps start to hold back U.S. growth, and to that extent, hold back global growth because there is no backup. So the risk to global economic performance is a significant thing to keep an eye on, and a significant risk for markets as the calendar turns to 2025. Moreover, the stock of global growth is huge by any stretch of the imagination at a time when interest rates are going to end up higher than expected, it would seem. We can see here the full breakdown from the IMF. We find that in debt to GDP terms, because of course debt is not scary in absolute, it is only scary if you can't afford it. And debt to GDP tells you how affordable is the debt, are you producing enough economic growth to service it? And of course, in the COVID years, we can see there's a massive surge for global debt as well as for the major economies, the emerging markets, the US and China. The change in global debt was significantly lower in the subsequent years because inflation was roaring and inflating that debt away relative to growth. Well, that seems to have stopped for the world in 2023, where public debt is starting to grow a bit. That's mainly powered by what's going on in the US, of course, and China, and to some extent, emerging markets. But we are now in a place where inflation has come down a lot, almost everywhere, from double digits or close to them, to levels that are much closer, if not quite at, central banks' targets in the sort of 1 to 3% range, depending where you look. And with that, the shaving away of debt relative to GDP, so the affordability improvement that we saw here and here and here and here, is ostensibly over. If you were to find yourself in a global scenario where the US buckles under higher rates, where already weak economies outside of the US have to deal with those higher rates without the benefit of stronger growth, you start to see how a treacherous debt risk starts to emerge. This is made that much worse because this particular US tightening cycle has been unique since the modern era. This is a chart from The Economist going back to 1972. Very important look back period because that's right around when the modern financial system as we know it is born, with the uncoupling of gold and the US dollar and the dawn of the fiat era. So what we find here is that in every other tightening cycle, they're listed here, the outlays by non-financial firms, that is regular businesses, on credit increase when the Fed raises rates. That's, of course, exactly the idea. The Fed is looking to slow inflation, slow the economy, and so it's raising rates to increase how much firms are spending to borrow, to discourage them from borrowing, and cool the business cycle. The 2021 to 2023 rate cut cycle has not done that. And the reason it's not, the reason that actually credit outlays mysteriously are falling even as rates go up, is because during the COVID years, everybody gorged on cheap credit. Well, that cheap credit comes due mainly next year and 2026, and at interest rates that are 200, 300, 400 times those that were incurred. If this happens at a time when GDP growth slows because rates are already high and going to be higher than previously anticipated, then of course debt affordability is that much scarier. Couple that with the most bullish disposition for risk sentiment that could be imagined. A survey here from the conference board showing in the US the percent of respondents expecting stock prices to be higher next year, off the charts. The allocation to equities has only been higher all the way back here at the start of the global financial crisis, and then back in the dot-com era. The allocation to cash has never been lower, looking all the way back to the second half of the 1990s. And so what we find here is tremendously robust risk appetite, which of course is clearly on display when we look at this performance. Now, given the risks, one has to wonder. Optimism is always highest at the peak. This is by definition the peak. But is this the peak? Or could optimism continue to build? It certainly could. But the way the table is set, one does have to wonder if indeed we've reached that peak or close to it, and if equities are in for a rude awakening next year as markets digest all of what's ahead. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. It is a holiday-shortened week, but we will be back on Thursday after market closures around most of the world, and we'll have two shows for you next week as well around the New Year's holiday before we come back to regular scheduling. You can follow me here and, of course, opining on the platforms formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak. Thanks for watching. Have a great holiday, whatever you happen to be celebrating. Macro Money will be back on Thursday to finish out the week.
is Monday, December 23rd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And man, are there some incentives governing our world today? Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be somewhere over here, there's only one place to do it, and that's on the evil, soon to be reformed Google YouTubes. Speaking of YouTube, we should say what's up to everybody that's already in the chat. Shout out to my good friends Donna, Ski. I shouldn't say good friends. Who knows? Maybe you don't think of me as your good friend. I think of you as mine. Donna Ski, Sleepy Mocha, Cato Prime, Brian Watson. I'm going to mess this up. Takwetsu Sai. I'm sorry. I'm not good. I ain't had much learning. Katan, what's up? Dav, what's going on? So many more. Do me a favor, everybody. Just keep the chat rocking. It'll spook the Google algorithm into tricking or getting as many people in here as possible. We can save the world one view at a time. Nice one, Victor. I try, my good friends. What a week last week. And we start this week to the upside. Not a ton of huge volume over the last, today, but the S&P 500, my baby's up 0.75%. The NASDAQ up 1%. The ever outperformer. Thank you, Katan, for those random ass characters. Donna says, I think of you as an online trading friend. Okay. I get the degree of separation. Hold on, Victor. I wouldn't say a friend. I would say you're an online friend. You just online friend zone me, Donna. I'm cool with that. Dow Jones, Grandpa's favorite index, up about 0.1%. And the Russell, the little engine that could, down about 1%. What a week last week. I had this feeling, though, and I asked Ilya this question. Do you think what we saw on Wednesday was a reason to believe the narrative had just changed, or do you think it's an expiration week and funny things happen on expiration week? I don't know if the complexity, I don't want to say it's not the complexity. I don't know if the texture of the market necessarily changed the middle of next week. We shall see. This is another goofy week where it's hard to get a feel on the market. Why? Because it's sort of a shortened, funky, low volume holiday week. And in low volume, any move can get exaggerated. But nonetheless, my babies, we are above 6,000, right around 60.50, which if you watched last call yesterday, Tom gave you his playbook. He said as the market got anywhere close to the highs on Friday, he'd start to lean against them. And they got there towards the end of the day. They didn't give them up. They drifted ever so slightly towards the highs. So not a ton of two-way action, maybe around from 1 to 2. The market gave a little bit back. But from 2 until 3, that last hour trade, they got bulled up again and traded towards their highs. NASDAQ at 21.7. The Dow Jones at 43.3 after, what was that, like 11-day slide, something like that in the Dow Jones. If you can't make the papers by people buying up the index, I suppose you could make the papers by being weak. And we had just a nasty slide, sort of marked by that Wednesday slide down to 42 and change. Guilt by association, Donna. Skew pops, but 2 tasty rotations. Katan, you're probably using some literary effects there, but I don't understand what you're trying to say. I thought we would have a little Santa rally today, but no, it's almost catatonic trading, a little up, a little down. Yeah, I think so. But I think the interesting thing about today is the continuation of the puncture of volatility. The last time I seen you guys and ladies, you people, what do you mean you people? The last time I had seen all of you, we were looking at a VIX in backwardation ever so slightly on Thursday. And, you know, if there's one thing that the market has taught me, and we talked about it a little bit on Thursday, it's that if you're looking for opportunities for short-term risk-taking, you know, I don't want to say it like that. Backwardation in the VIX is statistically a decent area to try to pull that off. Can backwardations last longer than 1 day or 2 days? Yes, they can. And we made that point, I think, last Thursday, great financial crisis. I think we're in backwardation for something like 150 days, something. It doesn't have to mean revert instantly, but that is probably the exception rather than the rule. And 2 trading days later, 2.5 if you want to count Sunday, but 2 trading days later, you now have sort of a normal VIX term structure. That front end, both cash and front end futures, we've gone from, I think, you know, at some point we were at 27. We were at 27, front end of the VIX curve was higher than sort of the back end, and you had full backwardation. We would go from 27 to basically collapsing down to 21-ish, and now at 17. So a continuation. And I would say probably this is probably an area where you probably look for that to settle out. Why? Because your 17, 18 handle, that's your long-term average, long-term normal in VIX and volatility. You know, that 13, 14, that's probably, I don't want to say it's abnormal. I shouldn't say that's abnormal, but I would say that's, things are going swell. And if you notice, we didn't last too long in that 13 handle until we got a pop, and we got a significant pop. So what did we see when VIX was at the 13 handle? What do we say? The distribution curve, you start to get a right-leaning distribution curve. What does that mean? More overall sessions in absolute numbers, more absolute sessions of leaning, higher, grinding higher, but what do you get? You get an accompanying fat left tail. What that means is you're probably going to get more instances where the market just grinds higher. However, statistically speaking, to move your expected value to keep it even, because you have a right-leaning distribution curve, you get a fatter left tail to sort of even out that expected value. So that the pot, this is what Tom says, the pot odds favor the downside move. That's what he's saying. And what did you get last Thursday? You got that nice sort of 3-4% move, depending on which major you're talking about. The Russell's been weak for a couple of weeks now. Shout out to Elias Spivak. But generally speaking, you get this violent 3-4% day, and it takes a couple of days to normalize that out. But that pot odds discussion, when you got upside moves, you're getting moves from like 0.25%, 0.5%, 1%, and when you get your downside move, it's a 4% day. That's that pot odds discussion. I might say it in a slightly fancier way, with a right-leaning distribution curve with a fatter left tail. It's all the same thing. I'm a visual person, so it's not really a fancier way to say it. I'm just explaining the image I see in my head. And others, they're talking poker talk, statistical talk. They're talking statistics. But you did see the payoff. Whether you got the follow through, that was the big question. And I would say emphatically the answer has been no. No, you have not. And our good friend Chris Vecchio has been sending me all these statistics. I think he misses the microphone. I'm telling you, that guy can't take a day off. But he was sending me, I think, something to the extent of all of the times where breadth goes from a large amount of breadth to a small amount of breadth. A small amount of breadth to a wide amount of breadth. So that's basically what we saw Thursday, Friday of last week. You basically had the technology sector leading the market higher, tech's leading the market higher. Breadth is absolutely garbage, by the middle of that week, and that rally, that explosive rally we got on Friday, that was everything. Everything participated to the upside too. You had sort of a lot of breath all at once. He sent me this fancy chart with all these fancy sayings on it. I go, that's one of the fanciest ways to say buy the dip I've ever seen. We had a good chuckle at that. Shout out to Chris Vecchio wherever he is enjoying this vacation. Sector money flows today. Technology led the way. Healthcare up 1%. That's interesting to me because we've been talking about just how on their butt healthcare it has been. And it kind of doesn't matter which name you pull out. It hasn't been an individual name story. Let me pull up. Let me zoom out here so you can see. Pfizer was on its butt. We started talking about getting long. I'm a little long Pfizer, which makes me sick to say, but I am. Moderna is on its butt. Eli Lilly had a little bit of a discount, not as much, not as pronounced as some of the others. Even if I look at just XLV, the sector ETF, you can see it's come off those highs of nearly, I want to say, 31.5, all the way down to 20. There we go. Try this. Sorry, I had the wrong symbol up there. It's come. I was thinking, I thought that doesn't make sense. 160 down to 140 in XLV, excuse me. But not just these, it's the insurers too. And I know that's not necessarily healthcare. Technically, these are financials, the healthcare companies. The insurance companies. Down from 630 all the way down to 500. There's some extenuating circumstances here, but a lot of these instruments have taken a haircut, right? So maybe the market is priced in the discount to future cash flows with a new administration, perhaps changing in low-hanging fruit regulation. The market's already seemingly pricing this stuff in. Why do I say that? Because I think it's important we all realize United Healthcare didn't just peel off from 630 to 500 for no reason. Right? Is there a change of leadership? Is there a negative headline? A bit, sure, but that's not enough to really change the price of your stock. What the market is anticipating is a shift in the underlying either business or business conditions. So in 3 months or 6 months, when you see some new legislation passed, when the new administration gets sworn in, don't be surprised if you're seeing these stocks do the opposite of what you would think. Because right now, before you get the headline, before you get the new legislation, before you get the more difficult business environment for some of these stocks to operate in, the market already priced it. So now when you get the headlines that drop and they'll start to say the negative things, the market will have already priced it. Watch. Can difficult conditions get worse? Yes. If they start passing things or creating conditions that the market had not forecast, sure, you can see negative reactions. I'm just saying the market on Pfizer didn't go from 30 to 24 for no reason. And currently, the only thing that happened is an election. There was no headline. There was no changing business condition. There was no new legislation that's been passed. So the market's doing its best to forecast a change in the future cash flows, putting it out there. And it's hard for me. You know what I mean? There's a part of me that goes, I don't want to be a part of the swamp. I don't want to be a part of the messiness. There's a part of me that believes Pfizer and Moderna, they've got some explaining to do. Then there's another part of me that goes, look, I got to provide for my kids' college. You know what I mean? I gotta leave something behind when my heart stops working for the kids. And if that alpha exists in a healthcare company, if that alpha exists in I don't know, shameless to say, like a private prison company, if it exists, somebody else is going to take it. And so is a weird part of me that just goes, look for the discounts, look for value where you see it and play it, because the market doesn't care about my investment or not. That opportunity is going to come and go whether I'm a part of it or not. Gosh, the conflicts in this business, I swear. It's tough. Am I the only one? Are you guys going to leave me out here and say I'm the only one that has difficulty making these types of decisions, that knows that I'm participating in a system that I want to be better? But if I throw a few investment dollars at a leadership team or a business model that leaves me conflicted and makes me somehow part of those negative outcomes, am I the only one conflicted by this? Okay. If you're not conflicted, you're probably not thinking deeply enough about this stuff. Like sometimes I look at some of these therapeutics, right? These therapeutic companies that do a lot of, like, let's say plasma donations, right? Plasma's great. It helps save people's lives. It is a good thing, net. Then I went down the rabbit hole one day and I researched the plasma industry. Not great. 75% of the world's plasma comes from the United States. In other words, we are exporting the world's plasma. There's only 2 countries in the world who allow for the payment of donations. I think we allow a donation once every 2 weeks, and we've never done any long-term studies on what frequent plasma donations actually do to the body. Why not? It's tens of millions of people who are making ends meet in an inflationary world by donating plasma. We don't want to know if this has long-term deleterious health effects to those individuals. Shouldn't we have done that by now? I think so. I think by weight, something like that, we export more blood than plasma in the United States. We have the world's most lenient plasma donation legislation, which ultimately is why we allow the payment for the donation, which is ultimately why we supply the world's plasma. Anyways, I don't know. I go down the rabbit hole with this stuff. And then if you go far enough and deep enough, you'll find the conflict. That's what I've realized. Go far enough, go deep enough, you'll find where capitalism and humanism intersect, and somebody's made a choice. Anyways, sorry. By the way, it's my morning. So at least for you, this is 5:30 at night. Imagine waking up at 7 in the morning and this is how you see the world. Energy up 0.2%. Finally, we got one on the board. Let me see what you guys are saying. Texas Redman says, my morals and politics. It's a good book. I don't know if it's a good book, but whenever I'm starting to feel like I'm starting to question capitalism, I read what the Theory of Moral Sentiments. I think that's the book by Adam Smith. It talks specifically about the morality. Pretty good. Pretty good. Let's see what else you guys are saying. Mess with my portfolio on a semi-regular basis. Catan says, I'm sticking with LP1 stocks. What could go wrong? Here, I'll tell you what could go wrong, Catan. The new administration decides to take a more cautious stance towards Medicare funding these LP1s, and also decides to mandate long-term health studies somehow, some way. It could, in theory, that could happen. For me, supporting my family takes precedence over other considerations. Yeah, Donna, I know. What you're just saying is you're a rational, self-interested actor in an economic system. But here's the problem. Now look at the prisoner's dilemma. So flip it. In capitalism, we all act in rational, self-interested ways. But in game theory, technically, the way to get the best outcome if we look at Prisoner's dilemma, is for us in some ways to not only, it's like Nash's theory of equilibrium, not only to consider our own rational self-interest, but to also consider the best interest of the group. That's the little thing that they never really talk about. Let's see here. Just get the papers, get the papers. Oh my gosh. You like how I did the accent too, Paul? I knew where you were getting that from. Andrew Juarez says, no, Victor, we don't care because you're a nicer person than most people. No, that's not true. I don't think so. I think all people are inherently good. No humans are born bad. You can socialize a good person into bad choices. But eventually, the sinner in us emerges. Catan says moral and politics too. Two messy words for traders. I agree too. You can't trade politics, or shouldn't. You got to be careful. Ralph, you're not the only one. I understand maybe 3% of what Victor talks about, but I'm here to learn so slowly. I don't know if that's a good thing. They say if you can't explain it to an 8-year-old, you don't really know it yourself. So if you're coming here every day and you're only picking up 3%, I think it says more about me than you, my friend. My bad, Sleepy Mocha. I'll do better. What are the LP1 stocks? What's that? Nova. I'm blanking on them. See. There you go. Throw some up for you. So Nova Nordisk, I think Eli Lilly, technically. I think Novo is probably one of the most direct ways, but Eli Lilly, Pfizer, and Amgen are some other indirect ways. And when I say indirect, what I'm saying is it's not 100% exposure. But NVO is probably the closest with the highest amount of direct exposure. They took a chunk out on Wednesday and Thursday. I didn't see that. This one would have been a decent short put candidate. The IV rank has collapsed though, so you can't do any. Hard to sell premium now with only 30% implied volatility and an IV rank at 17. But it is cheap on an absolute basis relative to itself, not talking valuation. Novo at 88.87 and has been as high as 150. If you're curious, I'll tweet it out. I'll tweet it out later after the show if you want to follow me at Victor Jones. The Owen Jones is 0 because I like to be difficult. But the Congressional Budget Office, the CBO, don't ask me why. I check the CBO website, I would say once a month for the reports that they do. Because a lot of the stuff that they do is interesting and they never announce it. Like not a few months ago, they basically did a couple of reports of ways to resolve the deficit in the budget, not necessarily to pay down the $36, $37, $38 trillion, but to close the $2 trillion deficit that we run annually. So that if they separated the report into two parts, big ticket items and small items. That was an interesting one. The other one was the impact of LP1 drugs and the potential cost and net savings of effectively subsidizing GLP-1s for the public through Medicaid, Medicare. I'll retweet that one out. To me, that one's worth going through because it's it's like I don't have the researchers to go through and try to make the estimates, but I think it's interesting at least to see where the government is in making their estimates on what will save, what will it contribute to GDP, what the increase in growth is, and what the cost is. The net cost was, I think, another $400-500 billion to the deficit. So it is a net. It's a net negative. With some positive externalities, but it costs. But anyways, I'll tweet that stuff out. It's worth taking a look at. Hims seems to be taking a share from big GLP-1 stocks, but here's the problem. I liked Hims. I liked this stock. There was a few that I really liked in fertility. I like this one as sort of like a fertility or lack of testosterone as testosterone solution. That was my play. But as soon as Amazon came into this business, and that was right around here, this big discount was Jeff Bezos announcing that he wants to sell hair and I was going to say a pretty crass word, hair and erectile dysfunction pills. The stock has since recovered. It ended up being a nice little discount to buy into. I'm still long Hims, and they are, if I'm not mistaken, to your point, starting to work down that path. I'm always curious, why is it like, what is it about hair, and I actually know the answer to this, hair and erectile dysfunction that's linked? But I guess I know the answer to that. Let's keep going here. Brian Watson says balanced budget. Think it's going to happen? Let me ask you, Brian, and the chat, let me ask you this question. Do you think we're going to see a balanced budget in the next 4 years? And I'm going to say a balanced budget is if we even get close. So let's say I'm going to give them a fudge factor of $400 million. I'm going to give them a fudge factor of $250 billion. Do you think we balance the budget in the next 4 years? Yes or no? Big trucks, Victor. In the next 4 years, do you think we balance the budget? I'll wait for your answers in the chat. I'll move on, and then I'll come back to this topic. Next 4 years, do we balance the budget? And balancing means come within $250 billion. That's all we have to do. We are currently running a deficit just shy of $2 trillion. All right, let's keep cruising. Before I talk specifically about bonds and notes, let's go ahead and take a quick look at the yield curve. Take a quick look at the yield curve here, and you can see what continues to happen. I thought, that's probably a dangerous word, dangerous phrase. But what we've seen here, the red line is the first cut in September. I remind you every time, but it's just in case there's a first-time viewer. What I like to do is look at the yield curve at different points in time. The yield curve, the yellow or the red line represents the yield curve, or where yields were along the tenors, along short-term rates and long-term rates, where they were at the time of the first cut. The first cut came around September. I think it was September 18th. Somewhere where we started a 50 base point cut. The green line is the second cut in November. The blue line is the third cut, December, just last week, which we've now memorialized with a static blue line at December 18th. And the yellow line, which we've now added, is the yield curve as of today. And you can see as they've dropped short-term rates are over here. As they've dropped those short-term rates from 5% to 4.75 to 4.5 to now 4.25, as they've dropped those short-term rates, the long end is lifting. And not only is the long end lifting, but what's happening as the long end is lifting, the Federal Reserve is also communicating higher levels of inflation expectations. So think of it like this. Why would the long end lift as they're cutting rates? So let's sort of think about the short end is the policy end. So what the short end is doing is monetary policy, because the Federal Reserve actually controls Fed funds rate. So what they do with short end rates, everything sort of in the shorter end is linked to the Fed fund rate. The policy rate goes down. It means that they're not necessarily taking care of inflation. They're easing up on their inflation fight. So the higher they keep those short-term rates, the more confidence the long end is going to have that those high interest rates are going to slow growth and inflation in the economy. But as you drop the short end, what you're saying is we're putting less pressure on growth. We're putting less pressure on the economy. And as you do that, you're unlocking the potential for future growth. You're unlocking the potential for future inflation. So as the short end rates drop, the long end is saying, oh, you're putting less pressure on the things that I care about. Because think, what does a long-term bond investor care about? They care about the purchasing power of their investment. So if they put a ton of money in these treasuries, that's paying them 4% or 4.5%. And then at the end of 10 years, they're going to get their principal back. A bond investor wants the purchasing power of all the principal that they're going to get back. They want that paid for. Whenever purchasing power has been eroded, they want that paid for in the yield, and then they want some surplus yield on top of that. So the lower you take short-term rates, the less confidence a bond investor in the long end says, I don't know if I'm going to get my purchasing power back, because I think inflation is going to be more of a problem. The lower you take these rates, the more inflation could become a problem. So I want more yield to make sure I get the purchasing power back. And I want an additional premium I want an additional premium each year, each month, because I have a little bit less trust in what you're doing. So I'm going to charge a little bit of a premium given the lack of trust I have in how you're executing monetary policy. So this is sort of the thinking, very simplified thinking of why we're seeing long end rates go higher. That a bond investor has less and less confidence that they're going to get repaid, the purchasing power repaid, along with an effective yield that covers their risk over this next 10 years. And so we're seeing this dance with the long end rates and short end rates as they move, the short end rates lower, long end rates lift. I sort of thought that as we got to the opposite end, as soon as we got to this point in time, which is what I feel is the pause, after the December cut, they are signaling a pause, that they're not going to move in January. And depending on what the inflation data shows from now until March, they could end up pausing in March. They can end up pausing for using inflation as an excuse not to continue to move rates higher, lower. And if they do that, they're going to be doing exactly what the bond market wants them to do, which is not to necessarily lower rates, to put pressure on growth, to put pressure on inflation. And so in theory, I thought that on the flip side of this December cut, we'd actually start to see yields move the other direction. We haven't seen that yet. What is one of the reasons why we perhaps have not seen that? Well, because they gave the bond market a little kiss before they left. So before they closed the door and said, we're going to pause, which would have potentially got the market to buy up bonds and then ease financial conditions and then create animal spirits in the marketplace, they gave the reason a market to hold on, the bond market, a reason for pause. What was the reason? They put what's called a summary of economic projections in front of everybody last week. So not only did they cut rates, which the long-term bond investor doesn't love, Again, because lowering rates puts less pressure on growth and inflation, which then erodes your purchasing power, which means maybe you're going to sell bonds because you don't have the level of confidence, or maybe you're going to demand more yield because you don't have the level of confidence that they're doing what they're supposed to do from a bond purchasing power standpoint. So what did they do that slowed the potential for the marketplace to go in and start buying bonds and ease financial conditions? They put this summary of economic projections in front of everybody, and they said, hey, be afraid of inflation. They said, remember when we told you we were going to be on pace to get to 2% by 2026? Remember when we told you to expect only 2.2% inflation for 2025? We were wrong. And we weren't wrong by a little bit. We weren't wrong by 1/10 of a percentage point. We were wrong. We're moving that to 2.5%. And that's a pretty big, that's off by a ton. Imagine the Federal Reserve is responsible for two things: stable prices and maximum employment. And they just told the marketplace that their projection for prices was wildly off 12 months in the future. They were so far off, and they had to adjust that from 2.2 up to 2.5. That's a big difference. So all of a sudden you're in a situation where if this is 2.2 and growth is 2.1, well, that would mean a bond yield, doing simple back of the napkin calculation, of 4.3%. And yields in the 10-year prior to this announcement was, I think we're like right here, 4.4%. So in my mind, in my thinking, the marketplace was at 4.4%. Their previous SEP had yields being in the ballpark of 4.4%. And so I was thinking maybe they true up 0.1%, maybe even 2%. And if they do, you're probably going to get a rally down to like 4.3%. You get a rally in bonds and yields come back down to 4.3%. Was the way I was kind of thinking about this whole thing. But I didn't really see a world where they were going to push this up 2025 and then move off their 2026 target to get to 2%. I didn't see that world. Probably should have in hindsight, but I didn't. But this is the reason that sort of kept bond investors from coming in and buying, in my personal opinion, because now you're telling people to expect 4.6% at best. And guess where we are right now, my babies? Yield moved its little way up to 4.6%. Now, inflation expectations, the data could substantiate being worried about 2.5% inflation, or the Fed could have pie on their face, and we could have disinflation much faster than people are expecting right now. You know, there's a case to be made where China's currently in deflation. Germany's economy doesn't look good, hasn't looked good, let me say. And the global economy has been slow. But if that's turning, there's a case to be made where they have undershot these growth estimates, that this doesn't need to be 2.1%. Remember, the current administration is trying to aim for like 2.5% or 3%. They got 3% growth, add 3% onto 2.5%, and now you're talking yields of 5.5%. That's basically how this works, back of the napkin. And I said this on Thursday. This is a what do you believe market. Do you believe growth and inflation are going to just roar in 2025? Or do you think we're rolling and that the economy is softer than the headlines are articulating, and that we're not going to get close to 2.5% inflation? The risk is going to be the opposite. and growth will be muted. In that world, yields look pretty attractive. But I think given the unknowns, 4, 6 probably early. Maybe get to 5 before that becomes an interesting risk reward. Because if you think your worst pain as a bond investor is 5.5%, you're somewhere between the yield should be somewhere between 4.6 and 5.5. You probably start to take your bet with high confidence at 5%, your midpoint. So maybe I'm a little early. At 4.6%, maybe I'm a little early, but I'm risk defined and it's small, so I can stomach it. Let's see what these guys are saying. What did you say about the budget? McNutty says no chance of a balanced budget inside the next 4 years. Brian Watson says 25 delta on a balanced budget happening. I think that's probably good. That's a good number. No chance of a balanced budget. Only if they mint a $2 trillion coin. Smart response. Darren says, hell no. Victoria, thanks for going over this again. Still new. You're all good, Victoria. Cactus Leo, Boomer Bonds. Here's the reason I go over this. One, because I don't think a ton of people on the network talk about bonds. So at some level, it's find your niche and create value across the spectrum of investment opportunities. I don't think I'm the greatest at speaking about bonds, but I think giving people some reason, some fundamental aspect of thinking about yields, it helped me. Maybe it'll help some. Because to me, yields are anything but technical. I could care less. There are a lot of markets where I care about technical analysis. Yields and the bond market are not one at all. So anyways, that's part of it. And then two, I just think, to me, all of risk taking is behind the yield. In other words, the yield is first. And if you understand the yield and the volatility around the yield, to me, then you can start pricing risk further on down the curve. But if you don't have a decent handle on the risk around the interest rate, well, that's the core of your risk curve. That's the very beginning, and everything follows that behind. I can tell my daughter just woke up. Sorry for the crying in the background. I gotta soundproof this room one day. So Shab says, LOL.